Good morning, everybody. Welcome back to another episode of The Market Open. It is Thursday, August 8th, 8:49 a.m., and we are here live once again. We've got a lot of things to talk about, as always. Biggest news from yesterday. I don't know if you guys saw, some of you guys were part of the stream on the market close, but Robinhood just, I don't even know what the word is to say how they smashed, crushed, like just unbelievable earnings, mind-blowing numbers. We're going to go through it, break it down. I know the stock didn't really reflect the results yesterday. That's because of the macro environment we're in. We'll talk about some of that macro and why the market basically collapsed at 359 yesterday after going up significantly in the morning around 10:30 a.m. And why the jobs data we just got might show a bit of recovery from that collapse that we saw, which is why Robinhood is now starting to move in the pre-markets. On top of that, back-to-back deals. Yesterday, we talked about Wendy's and Palantir. Today, Palantir signed a new deal with Microsoft. So another partnership for Palantir, this time with Microsoft. Microsoft, a much bigger company than Wendy's. Wendy's, very important use case with supply chain for 6,000 stores. Microsoft, they're talking about implementing AIP and all of Azure's OpenAI LLMs integrated into the government via IL level 6 security clearance, which is something that Palantir has, and Microsoft and Amazon. Only 3 companies in the world that have that. So big deal for Microsoft and Palantir. Stocks moving up a little bit on that news as well. We'll be discussing that. And then we got to get into the macro jobs data. We still have more earnings to go through. We had some earnings yesterday. We have more earnings today. But the jobs data this morning was pretty good. It was better than expectations. It's starting to show that the labor market is not necessarily, deteriorating to the point where a lot of the bears think it is. And as a result of that, stocks may have momentum to keep moving further up and do what we have to do. Chad with the 8:51 a.m. jokes. Is your title all caps so that the LLMs will know that you are serious? Did you guys notice my market open is literally all caps? I think every episode for the past year has been all caps. I don't know why. It's just been all caps. It's like when you wake up in the morning, it's like you don't need your coffee. You just need the market open. You're like, guys, Microsoft signs a deal with Pound. Like if that's in all caps immediately, I think it gets the morning started. So yeah, the LLMs will know I'm serious now because the title's in all caps. All right, let's get started. Let's get into it. We're gonna do Microsoft Palantir in a second. I think we'll start off with Robinhood, get that out of the way, talk through those earnings. Then we'll get into Microsoft Palantir. Then we will get into macro. The TLDR on the jobs report real quick. We'll go deeper into it, but 233,000 jobs versus 240,000 expected. The market wanted 240,000 people to lose their job. 233,000 people lost their job. Less people lost their job, which is good for the market. Now, 7 months ago, that would be horrible for the market because that would mean, oh my God, inflation, too much growth, too many people have jobs, yada, yada. Now that inflation's coming down, inflation's falling like a freaking rock at this point. We're going to get a 2 handle next week on CPI, which is going to further the argument for a rate cut. Now good news is good news. So if we have less people being unemployed, that's really good because the unemployment level kind of it could just stay in a certain range. It doesn't have to necessarily go higher, which is obviously bad for the markets. And it's rebuking a little bit of the jobless argument we got last Friday when the entire market collapsed, because again, that argument might be tainted. That data might be tainted through the hurricane that happened, which is having an effect on the number of jobs that are reported. Given this number says, hey, less people are reporting that they're unemployed, meaning more people are in the labor force, which is net good for the market. The one caveat here is people are saying, oh, well, what if that means inflation's sticky? Dude, at this point, I think inflation's falling. We've had oil almost below 70 this entire month. It was basically within 71 to 72. Right now it's at 75. I do not think more people being employed is going to lead to some dramatic uptick in inflation to the point where the argument we were having 7 months ago or even 3 months ago becomes the mainstream argument in the macro versus the argument around stopping unemployment, which would need to have a rate cut. So I think we're good on that jobs data. We'll explore it even further, but that jobs data was good this morning, and that's why stocks are doing okay. As Heavy D says, futures are ripping. That is correct. Futures are ripping. Okay, Lonsdale's on CNBC. Okay, so we'll play that in a bit after we talk about Palantir, and we'll get his take on Palantir as well. So let's start off with Robinhood. This was just an exceptional quarter. This was a quarter that I don't think I didn't expect. The street wanted $632 million. They put up $682 million. They beat by $50 million. Already the street raised expectations like 2 months into their earnings because they thought they would do better. And I thought, oh, that's going to be a little tough for Robinhood to kind of, make those numbers. Robinhood said, yeah, we don't really have an issue with that. We're going to beat those numbers even further. EPS, 21 cents. They're doing $188 million in profit. For all the people on Twitter, they're like, oh, Robinhood is unprofitable. They can't do this. They're giving away too much money. It's like, dude, you just don't understand the business. You don't understand how they're navigating being able to get people into the ecosystem, give them the money that's needed to incentivize them to stay and turn a profit. And that's because there's a lot of elements of the business that actually allow them to do this in a meaningful way, because they're a tech company with fixed costs that can scale essentially in an infinite way as long as they keep scaling their operations. And that's what they're doing. And at least that's what it's showing in terms of this growth for the particular market that they're trying to attack. 2 million gold subscribers. That's up 61% year over year. This is a $100 million ARR business now. 2 million people are paying $5 a month just to be able to use certain features on Robinhood. That's an 8% attach rate on all the customers they have. I think that number is going to go up and up and up. I mean, this is one of those quarters where it's like, oh, so the growth's not stopping. Kind of like Palantir, right? We're not going back below 27% year over year growth. We're going for 30%. Robinhood, by the way, right now, Robinhood, this is their second quarter of growing 40% year over year. I don't think they're stopping. I think they're trying to capitalize on that momentum. Now, this number, I said on the live stream yesterday, I'll say it again. This number was better than SEX. 13.2 billion net deposits. I did not expect 13.2 billion. Why? Because I was trying to be a conservative analyst when analyzing this company, and I didn't want to get overexcited. Really, my bull case was 650. If you guys saw my tweet on like all my expectations, they did 682. So they even beat my expectations by 32 million. I thought they would maybe do 12 billion in net deposits. They did 13.2 billion. That is 2 billion higher than what they did last quarter at 11 billion. Why does this matter? This matters because the lifeline of a financial technology company is deposits. How are you getting people to take money from their bank accounts, their Bank of Americas, their Chases, their Fidelities, their Schwabs, and say, hey, put it into this platform instead? And the dinky little trading app 4 years ago that was seen as a meme stock app is getting people at the tune of $4 to $5 billion a month to put their capital into this platform. And as a result of that, I think it's just phenomenal progress that Robinhood is showing. Now, here's the biggest thing that I cared about. My thing was like, okay, Q1 had good growth, Q2 had good growth, but what if Q3 doesn't show that growth? The market is forward-looking, which means they kind of forget about what you did the last quarter. Now they just want to make sure the guidance is good for the next quarter so they can continue to give you the multiple to justify buying the stock for forward returns. The CFO on the call yesterday said, well, in July, trading volumes were 20% higher than June across equities, options, and crypto. Equities and options were all-time highs in June. So the CFO saying actually July was 20% better than the all-time high month we already had in June, which is the last month of Q2. Now, crypto was really bad in June, and that's because the crypto markets collapsed. So 20% higher for crypto really is irrelevant. It really doesn't matter too much. But the point is, equities and options being the biggest take rate they have, that's 20% higher. So I think July is off to a good start. I mean, we know July is off to a good start. Now we just have August and September to make sure that momentum continues. Then he said, by the way, in July, they already did 4 billion of deposits. And in the first week of August, meaning August 1st to August 7th, as of yesterday, they did 1 billion of deposits. Robinhood is starting to do a billion of deposits a week. I mean, dude, if you just compare this to other financial technology companies, they're not getting $1 billion a week. They're not. I mean, like $1 billion for a meme stock trading app coming into that platform. A, proves that it's not just a meme stock trading app anymore. It's much more sophisticated than that. B, it's like, holy shit, dude, you're getting, and they didn't do the 1% brokerage transfer in July. You can still have the 1% gold match, but it's not like they're like on the phone with you, getting you to transfer from Schwab. You have to go through that process yourself because they stopped that process in June, as of June 28th. So now people are just like willingly putting money into the platform. Why? Because they're obviously getting a lot of benefits from it. They got a lot of higher accounts and bigger accounts that they added over the past year. And so people are contributing more money into the platform. This quarter was just an exceptional quarter. Where's the stock right now? Robinhood's stock is currently at 1828. So look, I don't expect the stock to move for a while. And the reason for that is because I think they need the macro to shape up in their order. And currently the macro is not in their order yet. The 10-year bond auction that we had yesterday, not the best. I mean, Robinhood reported on the worst day of 2024. Like just the worst day of 2024. You would think Palantir reported on the worst day of 2024, but by intraday, like the stock market started to recover on that. Like you kind of put in the bottom when the VIX spiked at 10 a.m. for Palantir on Monday. So they had earnings. It was still a crappy day on Monday, but Like the market kind of internalized the peak fear, the peak panic, and then Palantir had good numbers, and then boom, you move on. Yesterday, we like recovered all that shit, and then we like at 350, but on the market close, we just saw S&P go to 518, Nvidia go almost under 100. Like we just saw a collapse right before earnings and not a recovery. So it was a tough day for them to report, but it was such a phenomenal number that even the street couldn't really take them down in the red because they're just like, holy crap, dude. Like these numbers are unbelievable, but they put up the numbers. Now, here's another part from the presentation that I want to show, which is their net interest revenues, which is very important for companies that are collecting deposits. Margin interest. I thought this number would substantially go down. Why? Because they lowered margin rates. Margin is money you borrow from a brokerage. You have to pay a certain percentage to be able to borrow that money. Robinhood slashed rates from 14% to 6%. And in my assumptions, I was like, well, they're going to take a hit on this. This is going to hurt their net interest revenues because they're making less on the money that they're yielding unless they make it up in the volumes, meaning so many people come to Robinhood, leave Schwab, deposit their money, say, screw the 14% margin interest rates I'm getting from E-Trade. I'm going to get 6.75% from Robinhood, that they make up the deficit in volumes versus margins. And they did. Vlad fucking did it, dude. He somehow convinced everyone to be like, yeah, we have the lowest rates. Just use us. Forget everybody else. Just use us instead. And everyone decided to use them instead. This, to me, this stat is so important because when I've talked about user experience as a moat for Robinhood, this is why. You don't get people to leave just because you have lower margin rates and leave their entire brokerage and take all their stocks and equities and bring it onto your platform unless they feel the user experience is worth it, along with the additional incentives like margin interest being lower, which is obviously very good for people that are trading on margin. So the fact that they built this integrated ecosystem and really successfully executed the adoption of it across various verticals, gold cards, gold subscriptions, margin, etc., it's just phenomenal. It's just phenomenal. I mean, it's hard to say anything else other than it being phenomenal. $188 million in profit. That was amazing. Adjusted EBITDA was up $5 billion in cash. So really the market cap at $17 billion, enterprise values, $12 billion. I think $9 a share is already calculated in cash. Net revenues up 40% year over year, $285 million in interest revenue, $327 million in transaction revenues. It's just one of those quarters where you're like, wow, these guys are not slowing down. And I think Vlad knows this is his moment to take over and really establish Robinhood as a generational business. So amazing quarter, exciting quarter. We'll see what happens to the stock as the market hopefully recovers today and maybe over the next couple of weeks. But incredible quarter to Robinhood. And I'm a happy shareholder, dude. I mean, there's not much more that you can ask, dude. The only red flag I'll say, which was addressed pretty easily on the call, was monthly active users went down by 1 million quarter-over-quarter. Vlad basically said, hey, MAUs is irrelevant. Establishing like a advertising business. They don't need to literally monetize every single user that's there. A lot of people just like put cash in Robinhood and don't check it, right? They're not obsessed with looking at stock charts. So they're like, all right, they maybe buy some S&P every other month and they move on, right? So MAUs going down really doesn't matter. And he also said a lot of it was due to crypto. Crypto slowed down a little bit. So a lot of their crypto investors just didn't care too much to check their apps if crypto is down. Final thing I'll say on Robinhood, he gave a little bit of a shout out at the end of his earnings call, and it was really cool. So let's listen to this.
For closing remarks, sir.
Okay, well, thank you everyone for listening. We really appreciate the engagement from shareholders and the analyst community. And also special shout out to the retail analysts. We have a lot of retail analysts that cover the company as well. Maybe they're not on these calls, but they're on YouTube and on X. We appreciate you all, and look out for us on podcasts and other things in the next couple of days where we'll share more about the company.
That was cool, dude. That was really fucking cool. I mean, like, he did not have to do that. For him to actually like shout out Tanner, me, the retail investing community. He said the guys are on YouTube and X. Like, that was really cool, dude. It just goes to show like he actually kind of cares about other people than just the guys that work at JP Morgan. And on that public call, he's willing to say it. It's like a lot of CEOs are particular about saying certain things. They don't want to, feel like they're appealing to certain areas or not. And he said, fuck it. Shout out to the retail guys. The retail guys are doing a good job analyzing the company and doing what they need to do. So really, really exciting stuff from Vlad. It was very fun to see him say that. And again, the reason he said that is because he knows that a lot of people understood the company at $7, $8, $9, $10 when Wall Street really didn't get it at the time. And now they're putting up the numbers. Wall Street's starting to catch on. Okay, so look, I was talking to a bunch of people this morning. I think Robinhood is one of the most undervalued stocks in the market after this earnings. I would not say that if I didn't think Q3 could sustain that momentum, and maybe I'll change my mind if I get data from August and July that the numbers aren't matching what I thought it was, because you can pretty easily tell if they're going to beat or not per quarter because they give you 2 months out of the 3 months of data. So as of now, based on the data I have for July, based on the somewhat data I have for August, which the CFO said, and based on this quarter, and based on the valuation, I think this is one of the most undervalued companies on the planet. And as a result of that, I think it's a buy. I think it's a buy at 18. I think it's a buy at 19. I think if it's at 20, it's a buy. The macro might make it a sell, and it goes back to 14, 15. I think if it goes there, you try to figure out how you get some exposure to this thing, because the bottom becomes stupid. Like the risk reward becomes idiotic. And so to me, I think it's really cool when a stock tanks after amazing earnings, because if it's tanking for a stupid reason, which is the macro environment, then boom, it's just coiling up and you have an opportunity to grab more shares. So I like Robinhood. I bought more yesterday after hours. And if it stays in these prices, I'm going to buy even more. I really do think it is completely undervalued at this point. And we'll see how the market treats it. It's up a little bit in the pre-markets right now, so we'll see how it goes. Again, I kind of don't trust anything in the pre-markets because the markets are really volatile right now. And, we might get some more news from the 10-year bond auction that is going to happen in another couple months and things. Like, it's random shit that's hurting the market. We need a real reversal. We need the S&P to make its way back to 550. We need Japan to really calm down for this thing to be over and sentiment to change. So we'll see. We'll see what happens. But this was exciting. This was very, very, very exciting for Robinhood. And congrats to shareholders. I think they fucking executed, dude. I think they really executed beyond my wildest imaginations. And now it's just a question of how the market's going to treat the stock. Okay, so Robinhood right there at 1840, Shopify 63.89, Duolingo at 6% up, Palantir up 3.2% of the day, 27.17, S&P up almost 1%, CrowdStrike up 1.83%, and SoFi up 2.37% of the day, JP Morgan at 200, Rocket Lab at 1.75%. Let's talk about, we have the 30-year auction at 1 p.m. today. There you go. So real quick, the 10-year auction yesterday, it didn't go that well. And the reason it didn't go that well is because the government wanted to sell at a certain price. They weren't able to get the price that they got. They raised about $42 billion, which was fine, but there was different elements to it. And it was off by about 0.3 basis points. And that creates a massive spread. And as a result, it just wasn't as successful of an auction as you would think, based on volatility and demand from buyers of the 10-year. So the 30-year auction today, hopefully that goes better. But if that goes as bad as the 10-year, by the way, the 10-year right here is basically at 4%, 3.991, probably up a little bit on that jobs data as well. Then if that happens, then maybe the market collapses again at 1 p.m. So like really the very random volatile things are happening that we can't really control. I think the market's going to have to digest a lot of that. I think we're going to need a rate cut. I think we need better inflation data. The jobs data this morning was good. All of that happens. I think we start to get back to normal. I don't think we're in a recession. I still think there is recession fears that are out there. I don't think we are in a recession, and we just need the macro to clear up from a lot of those fears. So I think a lot of these stocks will get back to normal, but it just takes some time to actually get there. I don't think the 30 is as significant as the 10. Yeah, it's definitely not. The 30-year is definitely not as significant as the 10. The 10-year is the one that matters. I just hope the market doesn't interpret any slight, adjustment on the 30-year auction not being as good as what they expected as a reason to sell off the market. Also, Bitcoin went up as well on the jobs data. Bitcoin, 57.9. Look at that green candle right there. There you go. It hit 58,000 at one point. So 57,900 right here on Bitcoin. Okay, cool. So that's my my coverage on Robinhood. We'll probably talk a little bit more on it later, but yeah, I like it right now. I think it is undervalued based on those earnings. We'll see how the market treats it. And congrats to Vlad and the team. That was just one of the most incredible quarters that I've seen. Okay, Palantir. So guys, we got back-to-back news on Palantir. Yesterday, we were powering Wendy's entire supply chain operations across the world via Palantir's AIP platform to operationalize supply chains, demand allocation, logistics, etc. Today we figured out why Satya Nadella, CEO of a $3 trillion company, aka Microsoft, mentioned Palantir as a leader in their industry during their Q2 earnings call. Microsoft will leverage Palantir to expand AI and LLM capabilities to the military and defense intelligence community. back-to-back deals. First with Wendy's, now with Microsoft. So one of Palantir's core moats has been able to securely deploy software within classified environments like the government. That's why they just did $300 million in the past 90 days on their government business. Today, Microsoft and Palantir are like, hey, why don't we integrate Azure's OpenAI LLMs, Palantir's AIP? We can build AI-driven operational workloads across defense and intelligence verticals and really be able to scale AI within the government. It is very hard to win in the government. Palantir is only one of 3 companies in the world that have impact level 6 IL6 security clearance. Microsoft, Amazon, and Palantir are the only companies. Microsoft's and Amazon trillion-dollar companies. Palantir, a sub $100 billion company. Why is Microsoft partnering with Palantir? Well, because they obviously believe, and I think that's why it's important to listen to what the CEO says. That it's important to hear why Satya Nadella actually mentioned Palantir. I think they believe that Palantir is one of the most secure software platforms on the planet, and they can trust them. This is similar to me like the Oracle partnership. It's a little bit different in terms of the way the partnerships are structured and what exactly they're doing. But the fact that Oracle and Microsoft want to work with Palantir, that matters. That matters a lot. Oracle, $400 billion company, Microsoft, $3 trillion, Palantir, $60 billion-ish company. Like, it's a very big deal to see those big guys say, hey, we're going to not only integrate with you, we're going to publicly acknowledge you, and we're going to try to help you scale your business, because if you scale your business, obviously that helps us. Shyam Sankar, CTO, says bringing Palantir and Microsoft capabilities to our national security apparatus is a step change in how we support the defense and intelligence communities. Palantir AIP has pioneered the approach to operationalizing AI value beyond chat across the enterprise. It's our mission to deliver the software advantage, and we're thrilled to be the first industry partner to deploy Microsoft Azure OpenAI service in classified environments. Listen to that. First industry partner to deploy Microsoft Azure in classified environments via their OpenAI service. I mean, that's a very specific AI offering, and Palantir is one of the first partners that Microsoft's working with. Why are they the first partner? Because they believe that Microsoft would be a successful partner to actually get this live. President of Microsoft America says this expanded partnership between Microsoft and Palantir will help accelerate the safe, secure, and responsible deployment of advanced AI capabilities across the U.S. government. Palantir, a leader in delivering actionable insights to the government, will now leverage the power of Microsoft's government and classified clouds and robust Azure OpenAI models to further develop AI innovations for national security missions. Palantir is doing all of this with less than 4,000 employees. Robinhood is doing everything they're doing with less than 3,000 employees. I mean, these companies, dude, they're scaling. They're efficient. They're navigating complex environments, and they're building, dude. They're really, really, really fucking building. This sounds like a big deal. It is a very big deal, and we won't see the effects of it, for a few quarters, but we're going to see a higher uptick likely in the government business because of this type of a service. And Palantir just becomes a higher trusted name, Palantir 2722 in the pre-markets, because Microsoft's deployment of software is integrated with Palantir's understanding of AI. And that just creates a very healthy offering for a lot of government agencies that want to, first and foremost, know they can trust the software they're using. Obviously, we saw what happened with CrowdStrike. If they can't trust, it's gone. And it seems like Microsoft believes that Palantir is the best way for them to continue to gain that trust. Robinhood right here, 1836 in the pre-markets, Palantir up 3.5%. So this is good, dude. This is good. I think with both companies, Robinhood and Palantir, they are not de-accelerating on the growth. They are seeing an entire market. Robinhood is seeing a trading market, an investment market, a market of people that just have money that want to get a return on it, and they want to capture that whole market. Palantir is seeing the AI market in the enterprise, in the government, and they're seeing Wendy's needs AI. Microsoft's government clients need AI. Space companies need AI. Supply chain logistics parts of companies need AI. Healthcare companies need AI. Hospitals need AI. Everyone needs this shit. We're the best ones at providing this shit. We all care about providing value. We're not going to nickel and dime you. We're going to actually show you value. We're going to show you value before you even sign up to the product, because we can get you into a boot camp. How do we actually scale this in a way that makes us one of the biggest companies in the world? That's another similarity I like between Robinhood and Palantir. A, they're both founder-led, so you have a real visionary actually leading the company. B, they care about value, dude. They care about providing value. For $5 a month to get all the value you're getting from Robinhood, it's just a no-brainer. Like, you're going to pay that because the opportunity cost to not paying that is too large. Same thing with Palantir. The opportunity cost to not going to a boot camp and learning. I mean, they said in the earnings call that they had a 7-figure deal like 7 days after a boot camp. The value of not going through with a piece of software after you see the benefits of it is higher than knowing you could have used it. So it's very exciting, dude. It's very, very exciting to cover these two companies And I still believe these two companies are in their infancies, and they're just getting started with the next decade ahead. Someone says, Amit, you are quoted in an article on Benzinga about Robinhood. That is awesome. Super, super cool. I'll try to find that article in a bit. I think they did that last quarter as well. Benzinga actually likes to find creators on Twitter and use their content to analyze some of these articles. So super cool stuff there. And again, Robinhood crushed it. Robinhood absolutely crushed it. So it makes sense that the blogs are talking about them. I know they're going to get some price target upgrades. I would imagine they do. I know one happened last night, but I don't have the number on it. So I'm going to try to find it. I think it's by KBW. Let me see if I can do a quick search. KBW Hood. Most of the price targets were in the 23 to 25 range. So, KBW, if I'm not wrong, I think they raised from 22 to 23. This one might be wrong, but yeah, it looks like it might be 23. I could be wrong on this one though. So yeah, I think the price target upgrades are going to start coming, and it's going to be very beneficial for Robinhood as well. Gone are the days of the black box. Correct. Gone are the days of the black box. If you don't understand what Palantir does at this point, you're just lazy. Like, there's more than enough content on the internet to understand it. There's more than enough content to understand the bull case, the thesis. So I think the black box argument is done. I mean, think about that, dude. 2 years ago, people really thought this was the most evil company in the world. Like, they thought it was like the shadowy company that was going to take over the universe. It's like, dude, the company's barely worth $100 billion. Like, they're just trying to like scale in the enterprise and deliver value to your chicken nugget. They're trying to make sure your chicken nuggets go to your stomach. It's not a black box. So very exciting stuff, dude. Very, very exciting stuff. And it does not look like Palantir or Microsoft are slowing down, or Robinhood as well. Okay, so let me get to jobs report. Let's take a look at that. Jobs numbers were good, and then we'll talk more about what we've got going on in the macro.
CME, Rick, the numbers, please.
Yes, jobless claims for the week of August 3rd. These are initial claims, 233,000, less than expected, definitely less than 249 in the rearview mirror, and 233,000, well, that would be the lightest going all the way back to the last week in May, Now, revisions may, the first week in July, 223,000. I missed one. Continuing claims, pretty much spot on, not only with the rearview mirror, but the windshield. 1,875,000 is exactly what economists and analysts expected, and 1,877,000 is in the rearview mirror. Just now, revisions coming in. So last week's initial move up by 1,000 to 250, meaning we're down 17, and 1,869,000 we see on the revision from 1,877,000. So sequentially, we're higher on the continuing claims. This now becomes the ninth, Joe, 9 consecutive month over 1.8 million. We could see that is what many are looking at because
So core thing, initial jobless data better than expected. This is really good for the markets. We talked again a little bit about it, but we need to show that unemployment is not dramatically increasing, because then we're in a recession. 233 versus 244. Markets like it because it means less people are losing their jobs, showing a stronger than expected labor market. So Iran, that's another part of the macro. Iran said the latest they would attack Israel is on Wednesday. There was not some massive attack yesterday, and some reports said Iran is reconsidering their approach to attacking Israel. Kind of makes sense, because I think they know if they were to attack, like things are not going to be pretty for them. So hopefully, for the sake of everyone, they just don't do an attack. They don't do anything crazy, and we're done with that, at least for now. That not only helps the macro environment, that obviously helps stocks with uncertainty, but that also gets that threat kind of out of the way. So very important that that's not necessarily happening right now, along with the unemployment data, because if we had higher jobless claims than expected, we would have a tough market, dude. You would, like, the problem is if we have more people losing their jobs, it's good for inflation, because yes, inflation really is probably going to start to come down. But you get to the point where you start thinking, like, even the bulls would start thinking, like, dude, do we have too much unemployment? Is the consumer, like, we're hearing all this stuff from Disney and all these and McDonald's, like, is shit really hitting the fan with unemployment? And if you start really feeling that, and you start getting the banks that were thinking about their 5,400 target on the S&P, and they're like, this is not possible if people are unemployed, things can get bad. So we really needed to make sure unemployment was good, and that Iran stops being insane with their threats. So that is very important as well. And they do this a lot, as Lewis says in the chat. They're very old talk. But when there's an actual possibility of like the United States saying, all right, are you really going to do it? Because if you're really going to do it, like we're ready. And then they're like, no, we're not really good. It's like, okay, so then shut the fuck up. Like don't fucking even, it's like North Korea when they threatened this nuclear war stuff. It's like, dude, you're not going to do this. At the end of the day, dude, a lot of these countries know they just don't have like, they're not America. They're not the United States. They might have a little support from Russia and China. Russia and China don't want to fuck with America either. They say they want to fuck with America. They don't really want to fuck with America, dude. They want to stay in their little silo because we let them keep their communist dictatorship and we don't mess with them. And so they don't want to really start a World War III. It seems like they want to do it via the media, but when it comes down to pushing the button, a lot of times they're not ready to do that. And so I think Iran is a classic example of that. And that's good. That's good for the markets. And that's good to stop this from getting any worse. Robinhood right here up 7%, 1835. Beyond Meat is up 1.34%. Now, Dutch Bros, let's transition to earnings. Dutch Bros is down 20%. Dutch Bros is down 20%. Why is Dutch Bros down 20%? Honestly, I don't really know. I was more occupied with Robinhood yesterday, so let's look at their numbers right now. Let's see. Dutch Bros, this is an interesting one because they're obviously scaling very well. They're opening a bunch of new stores, all that stuff. I didn't expect this one to happen. So Bros, they beat on revenue by 3%, beat on EPS by 46%. Something had to happen in the context of guidance. They said, so a couple of negatives. They said their labor costs are up. They said their mobile ordering rollout is not fully out. They said they're adjusting some of their real estate strategy. Their guidance for the same store sales in the second half of the year, they said potentially could be negative from the first half. So I think that's why it's down 20%. But I don't know if that's a reason for it to be down. Dude, 20% is like a lot. That's a pretty nasty reaction. So I'm not sure, dude. I actually don't. Maybe we'll talk to Matt about this one on Friday. Saying your guidance might be a little lower. If the street's that sensitive to it, then okay. But the street's probably thinking, okay, Dutch Bros is a consumer company. We're hearing from all these other consumer companies that the consumer is slowing down a little bit. So maybe if their guidance is slower, we shouldn't be thinking of paying a premium, which is fair. It's a fair argument. And maybe that's why they're down right now. But they are down 20%. Earnings we had this morning that were important. Eli Lilly reported this morning they beat on EPS by 45%, beat on revenue. Wow, look at that. Dude, the street expected $9 billion in revenue. They put up $11 billion. They beat pretty hard on this one. Eli Lilly, yeah, up 12%. There you go. It deserves that. Wow, up 12%. Not bad for Eli Lilly. 872. I think Eli Lilly year to date, it got to these levels before, right? Yeah, it was at 966. So it obviously fell as the NASDAQ fell, but a nice 12% gain on today. And makes sense. They beat Ozempic, bro. People are using it. I feel like most of Ozempic's business is Hollywood. I feel like it's all Hollywood. I think Hollywood is like buying billions of dollars with it. Matt in the chat says they did well on earnings. They noted they were forecasting in low end of guidance because of consumer. Yeah, that's what I thought. Okay, so down 20% on low end guidance on consumer feels a bit aggressive. I don't know if it's necessarily a buy the dip because I don't know the financials that much about the company, but I don't know. It feels a little like intense. But it just goes to show you if the market's going to drop you on consumer remarks from your earnings call, they're very sensitive about the consumer. This is why the jobs data this morning was so important. The market. That's why I think we're still in choppy period for the rest of August. It's going to be a little tough to figure out how the market reconciles this whole consumer debacle. And that's a new word. I haven't used that word in a while. Debacle. Until they figure out how to deal with that debacle, then markets are still going to be struggling a little bit to try to figure out if the consumer actually is healthy or not. Because again, even I can't define. We're getting a lot of mixed signals, right, on if the consumer is healthy or not. And so I think we're really going to have to see until it becomes more obvious. Datadog had earnings today. They beat EPS by 43%. They beat revenue by 3%. Let's go to their stock, DDOG. Datadog up 7.1%. Okay, not bad. SaaS continuing to have a successful earnings. Under Armour, see, this is a hard thing to understand about the consumer, right? Under Armour beat EPS by 111%. They beat revenue by 4%, and they increased their guidance. They're up 12.4%. They said they're expecting their sales to be much more, I think was the exact wording of the quote, than anticipated. And Under Armour, they're selling stuff to the consumer at the end of the day. It's kind of a pseudo Nike brand, even though it's not as big as Nike. Yeah, Under Armour CEO exact quote was, "Our first quarter fiscal 2025 results were ahead of expectations." So they are, going against what people are saying in the context of the consumer, and they're winning. People are buying more Under Armour. Is Bumble buy the dip? Absolutely not. Absolutely not. Bumble is Bumble's down 40%, dude. But dude, Bumble is stupid. I don't think the concept of the women asking first is stupid. I actually think that there's like benefits to that for the guy. The problem is the company has not figured out how to innovate on top of that. Like 10 years ago, they figured out, oh, the woman should message first. And then 10 years later, they haven't done anything. Like, why did they even go public, right? Like there's nothing they added on top of that to really build an integrated dating app. And by the way, the Grindr CEO, one of the reasons I like the guy is because on an interview a month ago, he was like, the problem with Bumble and Tinder is that they treat men like shit. And some people might think this is mansplaining, but quite frankly, Grindr is down 1.29% on the news as well. If men are the majority of the people that are paying for this product and you treat them like shit, I mean, you're going to start to get people that just resent using the product. And then if you're not innovating on top of it, then it's like, what's the point? So I do not think Bumble's a buy the dip. The founder, by the way, Whitney Wolfe Herd, she left, I think 3 months ago. So it's not a founder-led company anymore. They put in some random suit. There's nothing exciting about this as a dating app. So this one's down 40%. They even acknowledge in their earnings call, hey, we have a lot more work to do. They've not innovated. And if you're not innovative, then it's going to be very hard for the app to continue scaling. Evan, what's up? Stock market news. Thank you for being here in the chat. They added friendship matching. Yeah, dude, I'm not going to a dating app to make friends. Okay. There's one reason I'm going for a dating app, and it's not to become your best friend. All right. Like we're not trying to get friend zoned on the dating, meet friends on the dating app. Like, what is this, dude? I think they had one feature a couple years ago. I don't know if they still have it, but it's like business associates, like make like LinkedIn connections from a dating app. Like, what type of nonsense like who came up with that idea in the boardroom? Yeah, let's have people connect to get a coffee to talk business on an app where everyone wants to hook up. It's like, no, dude, like you have to zone in on your core demographic and deliver value for them. And Bumble and Tinder really have just not done that. Okay, Costco. We got Costco data, not earnings, but sales data for July. Again, up 7.1% year over year, 19.2 billion. Comparative sales of 5.2%. You can either interpret this as, oh my God, the consumer's healthy. People are still shopping at Costco, 7% year over year growth. Or you can interpret it as, oh my God, Costco is for people to buy in wholesale, which means people are not, going to the Targets of the world, which means retail spending is not going down, but it's becoming more cautious. Therefore, the consumer is weakening because people are going to Costco. I think there's two ways to interpret it. That's the beauty of the equity markets. You can interpret things in so many different ways and then create a narrative based on that. Overall, I think if people are still spending at Costco, they have money to be able to buy. And when you're growing 7% year over year off a very big base versus 18 billion last year to 19.2 billion, I still think that's good. Jury's out on the consumer. I still think we need more data, but I don't think this Costco data necessarily is bad for the consumer. It just means that people still have money to spend, even if that money is being consolidated into some place like Costco. After the bell today, we have CleanSpark, we have Dropbox, we have Unity. Are those the three biggest ones? I think those are the three biggest ones. And Rocket Lab. Oh, wow. And SoundHound. Okay, so today's going to be a big one. And Archer Aviation. So, and the Trade Desk advertising. Okay, so we actually do have a lot. And Paramount. So we have like 10 earnings today after the bell. So I'll be live 3:45. We have a ton of earnings to talk about today after the bell. And we'll see what happens there. OMG Consumer Weekend. OMG Meet Kevin is probably losing his mind. Okay, so we have the market open in 2 minutes, but Meet Kevin is upset, dude. Meet Kevin did not like the jobs data. Meet Kevin is not liking any of this. So Meet Kevin's take on the jobs data. This is what he put out right now. He said he's trying to find the bear case. He said market rallying on unemployment claims coming in 7,000 lower than expected. This is an indicator that peaks at the end of recession. See below. Horrible leading indicator. Institutions know this. Dude, if institutions know this, then we're going to get a massive sell-off today, Kevin. If institutions really know this, that this is a peak indicator or a horrible leading indicator of an end of a recession, and institutions know this, they're going to sell off stocks today. And institutions probably shouldn't have bought $14 billion of equities on Monday if they knew that this is how the data was going to turn out. So I guess we'll see. But I think Kevin at this point is just trying to find a lot of arguments for why this market is bad. And look, maybe he's right. Maybe he is going to be right. I don't want to dismiss that. Maybe maybe things really do get bad. But I think the VIX spiking at least showed us that peak fear may be out of the system. Maybe it's not, but I think the unemployment data was very good. And now we just got to see if we can continue to have good inflation data while maintaining growth. And we'll see what goes from there. All right, all eyes on Robinhood. Let's see what happens. Thank you, everybody, for being here. 9:30 a.m. We got to get into another market open and see how the street is going to react to everything that happened yesterday and earnings from this morning. Thank you, everybody, for being here. August 8th, the stock market is now open. All right, wake your ass up. Looks like Robinhood's going to go red. It looks like the entire market's shifting a little red right now. Under Armour is up 15%, which is awesome. Robinhood, it's going to either catch a bid or go red. If it gets into the 16s, I will see if I can put in an order while I'm live because that becomes stupid. But let's see what happens to Robinhood. 1734. One of the other things about Robinhood is, look, if you've been looking for a position this entire year, I think after those earnings, it's just a question of when the market ends up realizing what those earnings means. But 1728 right now in Robinhood, I do think it becomes cheap here. Shopify at 64.63, up 1%. Beyond Meat up 11%. S&P 524, that's up 1%. CrowdStrike 234, 1.7%. Grinders up a little bit. Bumble's down 34%. Eli Lilly up 13%. Palantir 2706. So Palantir 2.8%, catching a bid from that Microsoft partnership that was very important along with the jobs data. SoFi 644, up 1.82%. JP Morgan 202. Rocket Lab 469, that's up 2.4%. Novix 1.29%. Nvidia was $98 in the pre-market. Nvidia was 98. Nvidia now at 100. So let's see. Nvidia is still sticking at that $100 level. SMCI, by the way, tough day yesterday. Fell almost 25% at 480. Now it's at 503. But tough day for SMCI. Fell pretty badly as the gross margin story really made the street a bit upset. So SMCI now down basically 50% over the past 4 months, still up almost, I think, 70% year to date. And now at $503. Lyft up 2.4%. New York Times up 1.3%. QQQ up 1.34%. So the NASDAQ is up. Airbnb. Oh, Airbnb co-founder and CEO Brian Chesky tweeted yesterday underneath someone who responded to his tweet who was like, hey, what happened on those earnings? And he was like, I think it's a good time to buy the stock. And then he deleted the tweet, but Bloomberg screenshotted it and they made an article before he deleted it. So there you go. Airbnb co-founder explicitly says, buy the damn stock. He thinks it's cheap. Now, if you believe him or not, that's up to you. But he does think it is cheap. Robinhood up right here, 1760, up 3% on the day. Shopify 64.11. Datadog up 8% off a nice EPS beat. Under Armour up 14% off a guidance beat. And Palantir 2712 up 3% on the day. Celsius is crashing badly. Yeah, Celsius got downgraded to $32 today. Celsius got downgraded. I forgot what firm downgraded them. But it was one of the big ones. And they said, yeah, this thing is going down. Oh, Bank of America. Yeah, Bank of America says the energy drink category had been steadily growing volume at a pace suggesting sustainable 4 to 5% growth over the next few years. This pace began to erode earlier this year as we saw new data. In our view, the slowdown was driven at least in part by Celsius faster than sustainable growth rates since 2021. Our research suggests that the slowdown in the category will have an outsized impact on Celsius, lowering price target from 60 to 32. Yeah, man, when the analyst at Bank of America says, hey, we're chopping this thing in half, street's going to sell it off. So I would be curious if Celsius catches a bid from anywhere, because at this point, energy is not the most exciting. Energy drinks are not the most exciting when it comes to AI and, the market opportunity we're seeing here. We're in a bit of a pseudo macro slowdown, consumer weakening. So are people really going to buy Celsius? Is the brand going to keep growing at the levels it was growing at, 5 years ago? Probably not. The stock is still up like 2,500% in the past 4 years. So it's still up a lot. It's just getting back to those levels it was at 2 months ago is going to be a little harder for Celsius. Crossroads says, I'm seeing price wars starting to begin for energy drinks. Yeah, that's fair. Monster. Yeah, where's Monster on this news? Wow, Monster's got hit even worse than Celsius. Monster took a beating, dude, down 13%. Robin at 1775, up 3.5% of the day. Monster took a beating. Goodness gracious. Well, it makes sense. I mean, if the whole energy drink market is declining, then I would imagine that Monster and Celsius both take a little bit of a hit. Let's see if Robinhood can get to 18 and start establishing that a little bit more as a base. 17.90 right now, up 4.56%. Again, I think the stock should be worth, closer to $30 right now. And I say that seriously. So the fact that it's at 18, obviously I feel it is deeply, deeply undervalued. $18, there you go on Robinhood. And I think the street will recognize that. But again, I don't think it's undervalued because the street doesn't like Robinhood. I think it's a really tough macro, dude. Like, it's a really tough macro. And for them to buy Robinhood, they have to buy it knowing like the market's going to be okay. And right now, no one knows if the market's going to be okay. 1807 on Robinhood. So if you don't know if the market's going to be okay, even though the guidance that, the CFO gave, Jason Warnick, about how they're already doing in July and August shows you that it looks like Q3 is off to a phenomenal start. It's a better start than Q2. Still, it's hard to bet that the market's going to continue to be okay. So I think as the market figures out that we're still in a bull market, then Robinhood ends up benefiting from that pretty easily as well. PepsiCo negotiations on Celsius. Yep, that's another reason. That was the first kind of thing that happened in February when they renegotiated their deal with them. That started the beginning of some worries around Celsius as well. Okay, Palantir 27.18. Palantir was 28.30 yesterday, fell when the entire market fell at 3.59. Again, for those that were not part of the market close, that was because of the 10-year bond auction. I don't think the biggest deal in the world, but that was something that took it down. We have the 30-year auction at 1 p.m. today. Rocket Lab up 1.1%, PayPal up 1%, Enovix up 2.3%, Enphase up a little bit. Intel got smoked yesterday. Intel almost got to $16. Intel's at 19 right now. Some investors are suing Intel for a securities fraud lawsuit. I don't know exactly their logic, but I think the logic is that they were misled about the nature of Intel's business operations. So they're pretty upset. We'll see what happens when that goes to court, but that's what you got right now on Intel. And then Upstart still holding its 50% gains from yesterday, 30% gains. So Upstart and Shopify still holding on to their gains as well and not doing as bad, even though the macro is a little tough. What's Nvidia's resistance? Let's take a look at Nvidia. So Nvidia right now, where's Nvidia? Nvidia is currently 101. Nvidia, in order for them to get a lot, there's no really walls on it. I mean, the next big wall is at like 105. Oh wow, that is a wall. No, that's a big wall. 105. There's 500,000 shares waiting to be sold for Nvidia. So at 105, we're going to need some money to get through that on Nvidia. Yeah, dude, that's a lot. That's a lot. Oh, sorry, not 500,000, 172,000. I read that wrong. 172,000. So still a lot of shares. But Nvidia's been doing an okay job staying above 100. It's just going to be a question of if they can get back to expanding. Robinhood 1758, so losing some of those gains. Again, you got a red candle right there. Now, when asked about the guidance on Robinhood in the context of if they're going to be able to maintain this momentum, Dutch Bros is down 26%. The CFO said a couple things. Number one, he said they have 8 businesses that are doing 100 million in ARR, so they feel they're very diversified. Number two, not everyone, but a lot of the bears are like, oh, well, if Robinhood, if rate cuts come down, that's bad for Robinhood because they're making all this money off net interest revenue. There's 2 arguments there that I think they did such a good job specifically answer. Like, you couldn't ask for a better question. They said, hey, a majority of our net interest revenue is based on a spread we get from cash sweep balances, which is unaffected by rates. So rates going up or down is irrelevant. Number two, if we cut rates by 25 basis points, it would affect $40 million of net interest income. They do $1 billion of trading revenues. So a slight increase in trading revenues, which is what happens because people invest when they can't get as much of a juicy return from a risk-free rate of return via a basic APY. You increase the transaction revenues and you make up that deficit of 40 million if you cut rates by 25 basis points. If you cut rates by 50 basis points, you would lose 80 million. So you have to make that up with trading revenues, but their trading revenues are exploding because people are starting to use Robinhood more and more. And in general, when rates come down, people buy stocks. So all the answers, all the concerns around why they can continue this growth, they're going to put up more than 700 million most likely next quarter. I mean, actually, if you take away a little bit of the Say Technologies revenue that they had in Q2, maybe you come in at like 640-ish. So like between 640 and 700, which would be 35% year-over-year growth, continuing up to that 30 to 40% year-over-year growth. Insanity. Like just absolute insanity. And if they really crush, it'll be over 700. If they, crush well, it'll be in the 640s to 650s. So, I mean, the street's going to see even further growth from them. And it's just going to further, make the argument about what Robinhood's trying to do. S&P at 523. You got a red candle right there from 524, but they are up about 1%. PayPal 63.64. Palantir, if you're just joining, we got a brand new deal with Microsoft today to implement AI for the DoD in classified environments within the government via Microsoft's Azure OpenAI LLMs. So exciting deal for Palantir there. And I think that's why Palantir is up 3.5% along with the jobs data that we got this morning. How do you check these paywalls? If you just look at level 2 NASDAQ data, it's not perfect. On Robinhood, ironically, I pay for Robinhood Gold. So $5 a month, they give you access to that data. And you can check it out there. So that's where you get to see like the bid and the ask. But you don't have to use Robinhood. I'm sure there's plenty of other websites that help you, that can show you and access that data. Okay, we had Joe Lonsdale on CNBC. I want to see what he had to say. If I can pull this up. Yeah, he is a co-founder of Palantir. So let's get his take on the markets and what's going on right now, along with big tech. And we'll keep going from there. Let's see if he says anything about Palantir as well.
Markets, but all of these things are interrelated. And I'm sort of curious just how you think our economy and which way our economy is moving at this point.
Well, you know, Andrew, it was fun to see the Palantir earnings right after 2 days of the markets all falling apart, kind of saying, by the way, guys, this AI stuff's actually working. We're actually growing really fast. And it felt like it turned things around a little bit. I mean, listen, I think a lot of the volatility this week was tied to things like Japanese banks, which obviously are an important part of the global economy. But, you know, the story here in the US is that our companies are working, our innovation economies growing really quickly. So we may be facing some macro headwinds, but the AI stuff's real.
Well, so that was the question. Palantir has made this work. The question is that idiosyncratic? Which is to say, is there something special going on at Palantir that may not be going on across the industry? Or do you think that there actually is more meaningful legs to this? You saw the Goldman Sachs report probably in the past week where they suggested maybe actually that we're not going to get the kind of sort of growth gains out of AI, at least immediately, than some people had anticipated.
Yeah, I don't think this is happening immediately. I think if you talk to people like Sam Altman and OpenAI and others, it's like we've in a sense we've failed so far because it's not impacting the entire economy right away. Now, that said, you know, the services industry in the U.S. is about $4.5 trillion in wages. Probably about a third of that can be addressed and be made more productive with AI and higher productivity. So it makes all of us wealthier. We're seeing things like in healthcare billing, logistics billing, the back end, you know, TPA processes and insurance. We're seeing this in private companies get to be a lot more productive. We're tripling, quadrupling the productivity. That's not going to happen where it scales out to the whole economy overnight. But listen, if we're back here and it's 2027, 2028, and we're not seeing that in productivity statistics, I'll be really surprised.
What about things like Apple? You know, we watched Warren Buffett, you know, get out of half of his position effectively in the company. But more importantly, the question becomes, does a company like that have a sort of massive super cycle upgrade this fall? Or is that something that you think ends up ultimately getting pushed out farther in terms of something that is truly game changing?
You know, there's lots of really cool stuff we could do with consumers and AI. I use these little things all the time to ask them questions. It's really helpful to figure out what's going on in the world, to draw pictures with your kids. Does this change Apple's business in the next year? Probably not. Apple's facing really strong headwinds from a lot of new Chinese competitors. It's not clear to me the new phones are, you know, nearly as good relative to the old phones versus what we saw 10 years ago. So
I agree with that as well. I still am not super convinced the phones are going to be that much better.
They may have a little bit of a tougher time.
I want to move towards politics, but I want to start with policy first. Curious what your reaction was to the judge's decision against Google this week, effectively calling it a monopoly.
You know, I've been on this for a long time of little tech versus big tech, as Mark Andreessen said really well recently. I'm a fighter for little tech. I'm a fighter for the innovation economy. I think a lot of these big tech companies have become not only kind of slow and ideologically corrupted. I think they're basically monopolies. I think that's right. And so the question is, you know, what are we going to allow monopolies to do in our society? How much can they abuse their power? If something is affecting hundreds of millions of people, if tons of these things are tied into it, we probably need some rules around it. I'm not against even going so far as to break some of them up.
So how do you feel, therefore, about regulation? We were talking to Roger Altman earlier about, you know, people have been very critical of the FTC. They've been critical of the Department of Justice as it relates to deal making, as it relates to a much more aggressive approach under this current administration. And I know that you're not a fan of this administration. So how do you square that circle?
So what I'd say is I'm not against being tough on big tech. I am against breaking principles, and I am against being radical. The Lena Khan lady, she's a total radical, right? She's not respected by her
Yo, did he say the Lena Khan lady? That's hilarious.
staff. She's a bully. She's randomly stopping deals. She's trying to apply theories that the courts have consistently struck down. She's going to companies like Axon, which makes Taser, and for a tiny little under 10 million acquisition that worked out, trying to make them clone their entire company. I mean, you can't make this stuff up. It's this totally anti-capitalist, totally against companies in general. That's not what the FTC is supposed to be about. I'm on the side of holding big tech accountable. I'm not on the side of kind of radical regulators who are against companies in general. Like it's insane what these people are doing. So it's two different things.
I'm wondering how thick your skin is at this point. As a backer of Trump, even if you're generous, we had a venture capitalist on the other day.
Okay, so that's what basically Lonsdale had to say about the FTC and big tech. Look, interesting shout out to Palantir in the beginning, right? He says, hey, maybe the street's starting to really realize that this AI thing is real, and that Palantir obviously is one of the companies that can capitalize on that growth. S&P at 523, SoFi at 650, Palantir 2719. Entire market's kind of flat-ish, also going down. S&P still up 1%, but holding on to some green after a red candle. The thing about the markets last night is the Nikkei index, I believe, fell another 1%. It was down 0.74%. And futures were kind of down. The auction on the 10-year really kind of depressed markets a bit. So no like real catalyst outside of the jobs data. I mean, I don't even think S&P would be green right now if the jobs data didn't come in better than expected, which was good. It was really good to see that we had decent jobs data. But if we didn't have that jobs data, market would still be in a little bit of a turmoil. So I guess that was good enough this morning, but we're going to need more, like a lot more, for things to continue to do what they need to do. Are we just going to copy the Nikkei now? I don't think so, but the Nikkei is down a lot over the past month, so we want to see some stabilization there. It's down 15%, dude. And then again, remember, that's a whole index. Like imagine the S&P to be down 15% over the month. I think the S&P is down like 6% over the month. It was down 10% when it got to 507. That's the thing about the 10% correction we're supposed to have. Look at Robinhood going below 17. This is like the thing about having a 10% correction is we had it so quick and then it went away. I think I've got to put in an order, dude. See, but I can't even see the option pricing is telling you this is stupid. Like my options right now are still up as if Robinhood was like $18 because the bid and the ask know that this is stupid, that this is not the real price. So even if I put in the order, it's probably not going to go through. But let's see if this goes through. Open. Let's see. We're going to put it a little bit above the bid. It's not going to go through. There's no way because they know this price is dumb. Look, all I'm saying, bro, is this is not financial advice, but I really like Robinhood below these levels. I think you get excited when a company falls on amazing earnings because there's no reason for it to be down outside the macro. And by the way, I will tell you the reason. The reason would be like if there was a real red flag, I would tell you the only red flag I see is the growth sustainable? We talked ad nauseum about that. Oh, that's another good word I haven't used in a while. Ad nauseum about why the growth is sustainable. And then number two is the MAUs went down, but we also talked about why that doesn't matter. So if you were looking to establish a Robinhood position, I could go lower 100%, but I do think these levels are very attractive for the growth you just saw. It's like if Palantir was at $22 after those earnings. You know, it's a no-brainer. It's like, okay, so even if we have to fucking DCA if it goes back to 19, like this is dumb, right? So that's what I think on Robinhood. Lyft right here at 930, NYT 570, Shake Shack 98. That's the Labdell is recovering a little bit after it got smacked with SMCI yesterday. IWM small caps also up 1% right now. But why buy if the market doesn't get it, Eric? I think that's the only time when you're supposed to buy. Like that is the time when the market gets it, you're paying a premium and then your risk reward is skewed. If the company shows, oh my God, we're actually growing, we're putting up all the numbers you want, but it's not that the market doesn't get it. Robinhood has 75% institutional ownership. It's not about the market not getting it. It's about the market being so macro driven right now that they're so sensitive to just the smallest thing that they can't afford to continue giving you a premium. That's when you take advantage of that because the company's good. The market doesn't understand it, not because they don't own the stock, right? Again, 75, 80% institutional ownership. It's just because the macro in this situation is not really in the best place. So I think that's where a lot of the opportunity ends up lying as well. So Kris said right here, amidst 75% of the global carry trade is beginning to be unwound. And I think Kris is right about that. By the way, Kris, can you come on? I can send you a WhatsApp I can send you a link in the WhatsApp if you can come on, because I want to talk a little bit more about this carry trade being unwound. There are some parts of the market that think, well, the carry trade still has a lot more to go. And then there's other parts thinking, actually, no, like the extent of it is done. And so if it's done, we're going to move on. If you can hop on, Kris, let me know for 10 minutes. Okay, sure. Okay, cool. So Kris will be on. And then we'll get your take on it. But look, if the carry yen trade is unwound, 75% of it, then these prices become stupid, right? Because at that point, the biggest thing that the bears were complaining about, which is that Japan's going to crash the global economic infrastructure of the planet. It's like, no, they're not. Like, that trade is done. It's unwound. We're moving on. And markets are going to be able to recover and ingest that. We're still a bull market with bull earnings. Palantir, bull earnings. Robinhood, massive bull earnings. You don't get those bull earnings if there's not growth. And so if the macro concerns about Japan are over and unemployment is not as bad and inflation is coming down and you have the growth, boom, you're in a bull market. Are you saying 75% is a bad thing? It's a good thing. No, it's a good thing, dude. 75% institutional ownership. That's a phenomenal thing, dude. Palantir barely has like 40% institutional ownership. So the institutions owning a stock means they want it to go up. You know, they are bullish on the stock. They obviously want their holdings to go higher. It's just you can't control the algorithms and you can't control macro-driven related fears when we've got into the worst month of the year, aka August, but also the worst time of the year, given what's going on with Japan. So it's just gonna be a question of how the macro flares it up. Robinhood has $5 billion of cash on their balance sheet and is trading at $15 billion per market. Yeah, look, that's it. Again, I don't want to keep talking about them because then it sounds like I'm like talking about them too much, and I'm just like, but like at some level, you look at it and say, okay, so the market cap now is $14.8 billion. They have $5 billion in cash, which means you're paying $9 billion. That $9 billion is what you're paying for a company going 40% year over year. How many companies are going 40% year over year, doing $188 million in profit? They're going to do almost $400 million. No, they're going to do $800 million in profit. They're basically going to do 675, 188, 127. Then you put another couple 150 million quarters, 675 million in profit, 2.4 billion in revenue, 9 billion market cap, or 14 billion market cap, 5 billion in cash. There's just not that many companies out there, right? And so from those numbers, it becomes pretty attractive. And then you got a sexy CEO like Vlad, who takes pictures with Fortune magazine. Everyone was so confused. They're like, Amit, how'd you get this picture? Like, are you texting Vlad? Where'd you get this picture from? I'm like, dude, I just Googled his name. I wanted a good picture for earnings. And this shit popped up. And I was like, all right, I'm posting this, whether it's a good earnings or a bad earnings. Like, this has got to be the picture that shows up. So that's the picture that we did. What's the wall on Robinhood? Let's check. I think Robinhood is so manipulated right now. So I don't even know if there's going to be a legit wall, but yeah, there's no really walls. It just bumped up to 17. The next like big wall, I guess, is like 1740-ish with like 30,000 shares, but there's not a massive wall. Yeah, dude, look at this. It just went from 1687 to 1708. It's like a 30-cent swing in 2 seconds because like obviously a lot of it just is more macro driven. Is Vlad's photo going to be your wallpaper? No, it's not. Dude, my wallpaper is so boring. Look at this shit. All right. I know a lot of people are going to call me gay because this is the most fruity wallpaper ever. But look at this. Like, my wallpaper is boring, bro. Like, I need something exciting. I just like, this is my home screen. For those that want to know my home screen, this is what I have. There's Twitter. There's Wall Street Journal. There's Robinhood. There's YouTube. There's messages. I don't know why Facebook Messenger is there. I don't use it. There's Discord, Bank of America, Facebook. I don't even know why Facebook's there. I don't use Facebook either, but that's my home screen for. You changed it from Carp. No, Carp is still the background on the iPad. The problem is the iPad is never charged. I'm really bad at charging stuff, dude. Bought this whole fucking iPad to have a second screen. It's never charged. And I have the charger right there. I don't use it. Like, I think I legit need to sell this thing, dude. Like, this is a waste. Like, I don't know why an iPad is useful after you get a MacBook. But the iPad is like absolutely pointless at this point. I haven't even charged my my charging case for my phone, dude. It's a mess. Like when I get rich, you know what when I get rich, I want a charger it around every part of my house. I want to go into the bathroom, have a charger. I want to go to like some random part of the backyard, have a charger. I want to go to the basement, have a charger. I don't want to ever be struggling to charge my phone. I want to be so rich that there's like 7,500 chargers in my house. and I never have to worry about a charger. S&P at 523. That's really what I want to do when it comes to money. That's what I want to do. And so when I get rich, we're buying chargers, folks. We're buying more chargers. HIMS is down. HIMS is down again. Wow, HIMS taking a beating as well. See, HIMS is growing 50% year over year. I don't think this deserves to be here at either. So, HIMS also taking a little bit of a tumble. All right, folks, let's get our resident Amit's Market Open contributor onto the show, get his take on what's going on in the macro and in Japan. Kris Patel, what's up?
What's up, dude? How's it going?
No, you're good. You're not muted. You're good. Kris, Japan unwinding. What are your thoughts?
I agree with JP Morgan. I don't think that we have that much left to go with the Japanese carry trade unwinding. And I think to some degree, there's going to be residual carry trade people that want to take the risk and stay in it and say, you know what, we really don't care that if Japan goes up and down, we have enough liquidity that we could survive any sort of drawdown in the Japanese yen or, the increase in Japanese yen, if you think about it. So I wouldn't necessarily worry about that. I think most of the danger is pretty much off the table.
But why do you think it's unwound 75%? Is that JP Morgan said, like, they think?
Because most of the people who did the carry trade, they're in very liquid things. Like, no one is going to say, yeah, you know what? Let me short the yen and at the same time buy some illiquid product that they can't unwind without taking massive losses. So if you think about it, it's like, imagine right now you bought US treasuries with it. Dude, you know how quickly you can unload your US treasury position without really that big of a deal?
Right.
So it's not, so unload the thing that people have to remember is it's all about liquidity, right? Now, if you bought some crazy small cap company with very thin float, then yeah, you're going to take a massive loss. But I mean, if you're shorting something and you're doing a carry trade and that, so I wouldn't worry about the carry trade nearly as much. I think the bigger thing to worry about is just like the unwinding of an AI bubble, which is going to be more gradual. And you're starting to see that kind of with SMCI falling off a little bit.
Yeah, let's talk about that, because I mean, we got to give you a little credit here. You've been talking about this thing unwinding for about 5 months now. Wow, 487 right now. What is happening for those that don't understand with SMCI?
Yeah. Okay, so when I first spoke about SMCI, it was in the gutter. Well, it was in gutter. It was just really undervalued, right? And so I bought it. I did really well on it. And then the position just went absolutely crazy. So a lot of people started to think of SMCI as a proxy play for NVIDIA. And that's not true. NVIDIA is a little bit different. They have a huge moat around their business. So, even if there's valuation resets happening, NVIDIA is not going to be impacted nearly as much. With SMCI, you've got three main problems. One, it's a super low margin business. So the valuation itself, if it gets extended, it doesn't have a lot of room to maneuver. So number one, it's just a very low margin hardware business. Any sort of impact on growth is going to impact them probably way more. Another thing is there are competitors out there, HPE, Dell, they make server racks too. This is not a complicated part of the ecosystem. I mean, the only thing that they have that's very unique to them is that they have some really good cooling solutions, like liquid cooling solutions that are used in AI, but that's not something that can't be replicated. So, the biggest thing to remember is if these guys get hit by some sort of changes in capacity utilization, that could end up, basically taking them out. And that's what's happening right now, where the valuation is being reset much lower because forward guidance is probably starting to weaken a little bit. And that's normal. If you think about Google, Microsoft, Amazon, you think that they want to spend $100 billion every year for something that doesn't generate 100 million, 200 million in operating profits right now? I mean, I don't know how much operating profits these guys actually generate, because we only know about the revenue, and the revenue is not that much either for AI related products. Right. So, yeah.
Okay, so SMCI taking that hit on the gross margins. Do you think the other semi companies take a hit besides NVIDIA, which is below 100 right now? Do you think the Dells and all these and ARMs, these guys also get hit badly?
I can't say 100%, when it's going to happen, but I do think that they deserve a valuation reset. And let me just show you one quick data point. I think once you see it, it just, and I got to shout out to Ed Yardeni. His team does a really good job with the charts, and I use them all the time. So let me just pull one up that I think is very telling.
We'll get Chris's take on Airbnb as well after this one.
Yeah. So let me just share my screen.
Nvidia guys, $100. It was just at 97 for those. If you bought the dip, let us know.
Yeah. Take a look at this. This is the semiconductor stock, index, right? Where you basically have all these semiconductor equipment and manufacturers, all that stuff. You see this right here? This is the valuation range for on a forward basis for semiconductors. You can see that they stay within a certain range for the most part. Usually when there's like a bull market, they'll transition from about 15 to 20% forward multiples on the PE. Right now, like about less than a month ago, they were almost at above 25, which hasn't happened in almost God knows how many years. The other thing is semiconductors are very cyclical. So you can see it's not just a up and to the right business. It's like waffling back and forth, back and forth. So you can see that even now they're still in a point where the valuation is a little high. So they have to come down pretty significantly to get to where they're normally trading at. You know, I mean, yes, there's the AI bubble. I mean, the AI wave that's happening, but it also means that some people have overcommitted to growth capital up front. And if they don't necessarily recognize the value, they may cut back on some of that capex. And I think the market is recognizing some of that right now. So, you know, so like I said, it's really a multiples thing that you have to keep a track of, where you can see that earnings, like on an EPS basis, are growing higher for semiconductors.
Right.
The problem that you're running into is that the stock prices have run far beyond what the forward earnings are. So, you know, sometimes it's just a matter of, you know, things have to just reset a little bit.
So if you think the Japan carry-in trade is unwound and the jobs data came in better than expected today, then where do you see the next 3 months in the context of the macro? Do you think it's rate cut, bull market continues, or actually, let me pull something up to kind of contextualize this a little bit more. So there's like kind of a double whammy that I read last night around how things can be kind of screwed either way. And it's by this account because it's kind of contextualizing how things get bad or good if this happens. So here's the tweet. The Fed is in a lose-lose situation. Let's get your take on this. One, if the Fed cuts rates aggressively right now, markets tank further and they risk a resurgence of inflation. Two, if the Fed doesn't cut rates right now, recession fears will continue to mount. No rate cuts means more worry about rising unemployment, which is now at a 3-year high. So the Fed has to pick between market and inflation instability or a potential recession. And also, if they cut rates right now, it'll make the yen carry trade unwinding worse.
Okay,
how do you resolve this situation?
So first of all, let's dissect the issue with inflation. Okay, so at this point, we have to look back and say, what caused inflation in the first place, right? Was it actually just a lot of money printing and people having so much money and they're going out and buying goods in a limited market? Yeah, that's absolutely what happened. You had this lag between all these people that had saved up money during COVID, and then all of a sudden you had the Russia, war situation, which rose energy prices like crazy. So you had like this combination of so many things to happen, and inflation just started to climb. So one of the things that the Fed did to control inflation was start to raise rates. But what that ended up doing was creating a housing bubble, not a bubble, but a housing crisis problem, where basically now the liquidity in the housing market kind of dried up because no one was selling their homes. If you got a sub-3 mortgage, you're not going to exactly sell your home to buy a 7% new mortgage, right? So that really screwed up another thing with shelter. So a lot of people stopped selling their homes, and that caused this ripple effect there. Right now, the good thing is shelter is coming down, right? No matter where you look in the country, there are areas where, shelter prices are starting to come down, and that's a trend doesn't look like it's going to be changing. That's a moving freight train, and to move it in another direction is not going to happen. The other thing is autos. Like, you remember 2 years ago, to get a car, you had to pay way above MSRP.
Yeah.
Those days are gone. Right now, auto delinquencies are rising. You know, all the auto manufacturers are telling you, like, hey, listen, we got more cars on the lots than we know what to do with. So a lot of the main drivers for inflation are starting to come down significantly. You also had this labor market that was tight, right? But now you have a flood of migrants that came over and kind of like, you know, like adding to the labor pool. So that's probably another factor to consider. So I think at this point, recession is pretty much gone. We're in a Goldilocks zone, you know, where it's up to the Fed to not to mess this up. And I still believe that I'm in the camp that we're going to be fine. There's no like crazy catalyst for a market downturn other than probably maybe a slight correction because of AI. But I think a lot of the valuations, even among AI, are started to kind of come down already a little bit, and they just have to catch up, right?
Yeah,
So,
like big tech has already
yeah.
corrected a lot. So your argument
Yeah.
is it's already reset valuations.
Yeah, I mean, I think right now what we should be looking forward to for the next couple of years is just the rally broadening out a little bit. And this is where I would have to agree with Tom Lee saying, look, you know, everyone for the last year was probably so focused on the mega caps that they completely forgot that there's a whole other, you know, 495 or 93 other companies that are making money doing what they have to do to basically, you know, get better. So I think money is going to flow into the small and medium caps. I think a lot of people are, you know, I think there's a little bit of concentration in the mega caps, and I think that's kind of being unwound a little bit. And so for me, I think the rally's just broadening. And when the Fed starts to cut rates, small and mid cap is where a lot of the corporate debt is. And as that corporate debt starts to get refinanced, you're going to see the value return to that area. So if you look at like regional banks, right? Regional banks absolutely got murdered last year. They've been one of the best performers this year. Why? Because now with the anticipation of rate cuts, smart money is saying, hey, listen, you know, if the AOCI losses at 5.5 or this much next year, when the Fed is at 3.5%, they're actually going to be much less, which means there's going to be more value for equity holders. You know, you're also seeing that with a lot of companies that are capital intensive on the small and mid cap size. You know, their entire capital planning revolves around how they can get financing for expansion projects to do more, or to just pay the current debts that they have, which may or may not be floating rate, which a lot of them have floating rate debt. So I think the Fed, when it starts to cut, it's going to help a lot of small and medium caps kind of like get repriced a little bit upwards. Mega cap is still going to do well because they just have a ton of share buybacks. They have a ton of business. And overall, I think the bull market continues. The only thing that worries me is you have a combination of like very small bubbles all over the place. One of them that just got deflated, if you know, is something that Joseph Carlson just mentioned, the caffeine bubble.
Yeah, can you talk about that? What's going on with Celsius?
So, you know, Celsius was a company I invested in earlier in December because the numbers were just way too compelling at the time. But as basically time evolved, I realized, hey, wait a second, maybe these guys are at the top of a bubble. Because if you looked at how the energy market or energy drinks market was, if you go to like March, April, May, dude, every other day a new energy drinks competitor would be launching. Right. And so that was a major thing. And then you started to see weakness in Starbucks, which their entire business is selling caffeine. Their business started to go down. So, you know, when you think about it, this is just a proxy. Monster right now is getting absolutely hammered, which, believe it or not, Monster's actually the one you want to be with. Monster, you know, you have these periods of basically like valuations get bid up so much because new competitors come in and they do really well. So everyone thinks like, oh my God, I want to be in this company. It's high growth. And they bid up everything. And then all these other smaller guys, they want to catch up. So they get into the mix. And usually what happens is the companies that are best capitalized and have the most staying power, they end up doing the best. And they survive these bubbles. And they actually come out much, much stronger at the end of it. So I wouldn't touch Monster right now. I'd let the industry consolidate. But, you know, this company generates really good and strong cash flows. They have a buyback program. I don't know if they generate a dividend right now, but But it's something to just keep in mind. They're trading at the low end of their price to sales. If you look at Monster's price to sales historically, it's been close to about 8. So it is getting a little bit interesting. Yeah, I would, but well, once again, I think right now the consumer the energy drinks market needs a heavy dose of reality and some consolidation. And once that finishes, then I think this will be a nice long-term investment to make in Monster.
Okay, Robinhood, give me your take on those earnings.
I thought they were okay. The monthly active users thing was definitely something that that caught a lot of people off guard. But you got to remember, it's also the summer, right? There's a lot of people that don't want to do anything in the summer, man.
Would you buy Hood here?
Not yet.
Kris, you've been waiting for 3 months now at this point.
Only because I am out of liquidity. I don't have any cash. I'm maxed out.
Okay,
right
let's
now,
say you did have cash. Would you buy Hood? That's my question. Because I
would
still
say I'd
feel like you're hesitant, but I'm only calling you out on this. I'm just joking with you. I'm joking with you here because you say you like a stock at a certain price and then it falls, then you like it at a lower price, which is healthy. But I feel like the earnings they put up yesterday is it's just undeniable, some of these prices.
I tend to weigh things against other opportunities. So that could be my biggest fault when it comes to investing, where if I see something else that has a better opportunity, even though this one could be really good, I kind of just avoid it, you know?
Yeah.
In my opinion, Hood is something worth dollar cost averaging into. I'm not so sure I'd do options on it just yet, because I think that I think right now there's a point where there needs to be, once again, some consolidation in the space. I do think that they're eating Charles Schwab's lunch. I think right now, as many people that I've seen you interact with, everyone is moving away from Charles Schwab. So I think Robinhood itself just needs to keep doing what it's doing and keep adding features. And eventually they'll get to the point where they're going to do really well. If you're a retail, I don't think I've met anyone who doesn't have Robinhood as a even like a side hustle app. But the one thing I'll tell you, the monthly active users, like my wife, she's got Robinhood. She doesn't use it.
Yeah.
Why? Because she's in her position. She's not the type of person that trades. All she does is, buy, and that's it. Done.
But my question broadly here, so I get that. My question, and that's why I think the MAUs is not the big of a deal, but my question is, there's not a lot of companies growing at 40% year over year with $5 billion in cash, trading at a $14 billion market cap, which is why I think it's kind of obvious here, and I think it's down likely because of the macro uncertainty around the market.
Listen, I don't know exactly why they need to hold that much in cash. If I was Vlad, I'd buy back a fuck ton of shares.
I think that's what they're doing. I think that's what they're doing. For those that wondering if they started the buyback, they started it in July. They announced it yesterday. I'm assuming they'll do more right now as well.
I would never, ever short a company that's doing share buybacks. That's number one. And number two, the value of those share buybacks is going to be realized not today, not tomorrow, but 2 years from now, where if you think about it, if they bought 1 million shares back at 15, right? That means that on a forward basis, that's a huge yield boost that they're going to keep having, you know? So I don't know if people do this, but there's dividend yield and then there's also buyback yield. I don't know if you've ever seen that in a valuation software. Have you ever seen that before? No. So, when you're thinking about companies and how you value them, right? So some companies you can value them purely based on just their earnings multiples like this, so it should be this, right? And then they're not really growing, so I don't want to be in it. But then even if their top line isn't growing that much, if their bottom line is doing well and they just keep buying back shares, dude, the stock price is going to absolutely skyrocket, so it's interesting. So I'd look at that as a metric.
What else are you looking at? So I know you're big on the cruises and you're still in that, doubling down on that. Anything else that's catching your eye?
Hold on one second. So REITs are also a great place to be also. It's worth looking at. So some office REITs have done exceptionally well. Like SL Green has definitely done well. I'd look at Vornado, VNO, as another one, they're a developer in NYC. Another one is BXP. If you want to take a look at BXP, that's another good one. These are like class A trophy asset building. Just do a straight line. Yeah. And you could go out and do like a 5-year. And you can see that they still haven't recovered to their pre-COVID levels yet. And primarily the reason why they haven't recovered to that is because the rate at people going back to the office is happening, but it's not like happening at the quickest pace. The other thing is, at the same time, these guys are hit by higher interest rates, because the higher interest rates impact their capital allocation and their capital decisions. So the companies are good. And I think when rates start to come down, you're going to get twofold of a boost. You're going to have one, a lot more people returning to the office. And then two, you're going to have their capital structures end up being priced a little bit better. So right now, if you look at the yield on BXP, what is it? Close to
5%. It's at 5.7.
5%. So right now, if you go 2 years ago and you say to somebody, hey, I have a class A trophy building like REIT that's trading at 5.7% dividend that's growing, bro, they'd buy that shit from you in a heartbeat. Now all of a sudden this thing's out of fashion, but that's typically when you want to buy, when things are out of fashion. So
right. So overall, Kris, you're giving us good news. You're telling us that we're going to be okay in this market, no matter what.
Yeah, I think we're going to be okay. I mean, look, we're going to deal with some volatility until the Fed rate cut actually comes in, and then even then, we just have to keep a track of the macro data. Which, by the way, I think it's doing fine. I think this is where you really have to dig down into the nuances of the data that you're getting, like Tom Lee did with the whole like Texas being closed for a month kind of thing, where you had that whole situation happen. And I think that data, once it kind of like filters into the regular psyche, people are going to realize, like, now you've got two different indicators that are telling you that we're not actually in a recession. So number one, you had the ISM data, right, which shows positive job growth. ISM data is good. So number one. Number two, today you saw less initial claims. You think that if the unemployment rate's growing, but at the same time the initial jobless claims are going down low, So I think the data point that came out at the worst possible time when the Japanese were doing their thing, and also at the same time the market was kind of frothy a little bit. I mean, we have to admit that
it was definitely frothy.
Yeah. But now everything's kind of been reset to the lower. I mean, I can't say that it's not going to go any lower than where it is today. Like, that's just impossible for anyone to say. But I think we're at the tail end of a mid-year correction. I've seen a lot of people's portfolios on Savvy Trader. They're getting absolutely destroyed, which leads me to believe we've got a rally coming.
Yeah, I mean, again, that VIX spiking created a lot of panic fear or peak panic, and we saw institutions load up. They loaded up for a reason.
Exactly. And this is the part that I'll never get. When it comes to human emotions, always get the better of most people, where they sell their winners because they're like, oh my God, I don't want to like lose my profits. No, let your winners ride a little bit, And when there's peak fear, that's the best time to be buying. I have no cash. Like I wanted to like go to my wife yesterday and be like, hey, honey, I know you got some money on the side. That's like the untouchable money. You know what I mean? That's like her money.
Yeah.
And I want to be like, come on, girl, let me just get a little bit of that and put it in Robinhood, and I don't think I got it. I did get her. I was able to convince her because I put her about 4 or 5 months ago in like money market in her, because the thing is, like, I could lose my money, no problem. Yeah. Her, I never want to see her ever come to me and be like, oh my God, you caused me to lose my money, blah blah blah. So I put her in money market, and now that the market corrected, now I told her, like, listen, now you can move your 401k into a little bit more risk on, and put it into some more large cap, and it's large cap index. That's it. Nothing like crazy risky or anything like that. So
yeah. No, and I know we talked a month ago. You were eyeing Robinhood and you really like them, but when it dips and you don't have the cash, it's hard to buy. I mean, there's a lot of names.
That's the hardest part. Sitting, like, for me, I think that's one of my core weaknesses as an investor, is that if I see a good deal, I can't pass it up. The problem is
you go heavy
better.
Exactly. And when you make a deal, you go so heavy that you're kind of all in on a couple of plays. You're not like, going to diversify to the point where you have extra cash laying around to go heavier on another play.
Mhm.
So, Airbnb, they're down 15%. Is it a buy right here?
I would think so. The only thing is I have to do a little bit more analysis on their operations, only because I've seen a lot of Airbnb hosts kind of drop out of the market. The business model is just very difficult for some people to get around. And the thing is, there is a cyclicality in consumers where the consumers are kind of like shying away a little bit from Airbnb because, like, I'll be honest, the quality control on Airbnb when it comes to some of the hosts has been lackluster, and that's causing a lot of people to rethink Airbnb as a viable um, alternative to like hotels. Because remember, at the end of the day, they're competing against hotels and stuff, right? Now, who wants to stay at an Airbnb where they got to do the fucking laundry, they got to pay this cleaning fee, they got to pay this fee, that fee, all this other crazy shit. So a lot of people are, not saying that they're not going to use Airbnb, but what they're going to do is they're not going to use it for every purpose. Maybe like use it for like let's say me, you, and like 3 other guys were going to like Aspen. We'd probably get an Airbnb. It makes sense to get an Airbnb. But if it's like, if it's just me traveling and I'm going, like me and the wife are going like somewhere, we'll just probably stay at a hotel so we don't have to deal with all the other bullshit that comes along with it,
Right.
So
So you don't, do you think the regulations are still issues for Airbnb to deal with, or no?
I think that's a serious problem, with the housing issue at the top of pretty much voters' minds, especially if you look at it in certain geographies. Airbnbs have taken over certain cities to the point where it's hurting a lot of the locals, and the locals are kind of fighting back a little bit using politics, and politicians are saying, look, we're going to limit Airbnb severely in this area. So it just means that it's going to slow Airbnb down. I don't think it's going to kill them. The other thing is they do have competition from Vrbo, Booking.com, and all these other guys. I mean, they do have a moat in that they have a lot of history with tenants. What are they called? Not tenants, with hosts, and also from consumers, because that history itself is kind of like a badge of honor, saying, look, I'm a trustworthy person. My property is worth staying at. So maybe they don't move to like the other sites like Vrbo and on the other thing. But someone said to me the other day, and it was very interesting. They said, what they do? They go to Airbnb, they take a screenshot of the picture of the place that they're going to stay. They just go to Google image search, and usually they can find the listing like on the thing and on the personal websites, in which case now they're saving like 20-30% on their rental. Like that's what my wife does. I didn't even know she did that. So,
I mean, no, that is really interesting. Airbnb, again, I've always liked the company. I just always felt the stock is a little tough in certain ways to justify.
Just remember, they are generating a crap ton of money, and they're also buying back shares right now.
Right.
So,
right.
That's at some point, Airbnb's valuation gets ridiculous enough to buy. So that's the thing. Like sometimes it's the business, and sometimes it's just the values are just ridiculous. So.
MicroStrategy just split. There we go. Would you buy some micro at 131 a share?
This is gonna sound really fucked up, but I probably would buy a little bit because I don't know how this Bitcoin fucking worm has gotten into my brain, but now I'm looking at Bitcoin way more like, maybe I need to buy some more Bitcoin, and I'm just like, why is this happening? Like, I was an anti-Bitcoiner for such a long time, dude.
So was I.
And
I wasn't anti-Bitcoin. I just didn't care about it. But now, I actually care.
Yeah, I think of it as, honestly, it's a hedge against like stupidity in the US dollar. Like if the US dollar, the government, I guess maybe as I get older, I'm becoming way more cynical about the government, because I just see the stupidity on both sides now. I'm not to make this a political thing, but neither candidate has any, in my opinion, real plan to deal with any of the major issues that are coming up. Like national debt is a huge problem, and as time goes on, that's going to become a bigger and bigger problem. You ask Kamala, what the problem is, like how she would solve it. You know what her answer is? She would just ask you the question again and phrase it in a way like, well, everyone has a lot of debt. American families are hurting. And I'm just like, bitch, I asked you for a solution. I didn't ask you to just tell me the goddamn thing again in a different way to make it sound like you actually give a shit about my life. Give me the answer, you know? And then you ask Trump, Trump will just tell you, the Democrats, all they want to do is just raise taxes. You know, it's just, bro, that's not a solution, Trump. Come on. Both of y'all need to give a better, why can't we get some fucking decent, you know, I know why we can't get decent leaders. You know why?
Why?
You know why I meant? Because
Why?
anyone with even a single extra brain cell, they go into politics and the other side just tars and feathers you.
Yep.
To the point where, you know what? Like, look at Obama. Okay. Obama was in my opinion, Harvard grad, smart guy, knew what he was talking about, great with the economy. Oh, this guy was born in Kenya and he's like all this. So that who wants to put their family through that bullshit? Which wife wants to stay with a husband that at the time, like literally from the minute you wake up in the morning to the minute you sleep, you have all these social media personalities just commenting about everything in your life. Your kids have no real existence, right? You put them through fucking hell and back. And the thing is, at least 20 years ago, it was only TV. Now it's like Twitter. Like everything happens. It's on fucking Twitter. You know.
I agree with you. It is tough, the two choices we have. Did you see that Tim Walz doesn't own any doesn't own any stocks or equities?
I mean,
which is their VP, because they disclosed the finances. And some people were saying, well, he has no interest in the private economy then. Like if you own nothing, or sorry, you know what I mean? Like if you have no stocks at all, do you have any interest in America succeeding, right? Do you have any skin in the game? I think he has like a home. That's it.
You can have skin in the game because I feel like there are genuinely people out there that do give a crap about the country beyond like their own personal financial gains.
Do you really think so, dude? Do you really think people care more than their personal financial gains? Because I don't think anyone cares about anything other than
I've served with those people, dude. I've served with those people.
But I think
there's tons of them out there.
The people that actually put their life on the line is different from the people that run for Senate.
No. Trust me, there's tons of people in Senate and even in the House. They have their own they left their private businesses to fucking run for Congress.
No, but that's my point. They made their money and then they decided to do this. This guy, Tim Walz, doesn't look like he's ever made money in his life, which is interesting.
I mean, some people just don't care about money like that. You know, some people they're very satisfied with the certain lifestyle that they have. They put their effort and energy into like their kids and stuff. So, you know, everyone's level of accomplishment doesn't come from the number of zeros in their bank account, you know? And I know tons of people like that they're just happy. Like, oh, I like my community. I want to make it better. I want to try to, you know, give my kids and the kids of the future a better life. So even though it does feel like there are tons of people has a military pension. I don't know about how much of that pension is really that big of a deal. My thing is, I wish Congress, especially the legislature, all of it was closed off. Like you don't know who's voting. Who votes for who. Everything is no TVs, no cameras allowed in Congress. So this way, all these motherfuckers can't just act up like crazy. Like right now, I think, dude, Congress is basically turned into this. Like it's like the Jerry Springer show. Do you notice the similarities between the two now?
Yeah. Oh, 100%. You know? It's all a big game. Well, that's my thing, dude. That's my thing about politics is like, I thought what you were going to say originally is if you have half a brain cell, you don't go into politics, because a lot of like the people that make a difference in the world, they go into business. They try to build something. And it's not like you can't make a difference in politics. It's just so hard. Like you could be the most honest person, you have good intentions. And then Obama, he really wanted to do some good shit. He was stalled for, I think, 3 years from 2012 to 2015, his second term. Yeah. He couldn't do anything outside of the Affordable Care Act after he got that done. So it's tough.
Yeah, I mean, he spent a lot of his political capital in saving the economy. That's what I think, you know.
Yeah, in 2008, yeah.
One of the things that I'll just say is it's probably just cheaper to buy a politician nowadays than to actually go up and run yourself. You know, if you think about how everything works, especially after I forgot the legislation that allowed for super PACs. I think that was the worst decision ever made. I forgot what the Supreme Court decision that was. Whatever.
Citizens
basically,
United. Citizens United.
Citizens United. Yeah. So now all of a sudden, everyone just basically just gets these super PACs together and just lobbies Congress people. I mean, I don't like Cori Bush. Okay, I hate Cori Bush, to be honest with you. She's a fucking dumbass. But she lost her primary, right? And one of the reasons why she lost her primary is because AIPAC just put a fuck ton of money against her, right, on the other side, and caused her to lose. In my opinion, probably the reason why she lost. Can't say definitively that's the reason why she lost, but that should infuriate you, even if you like the person on that side and they get elected, whatever, and if you don't like the person, they get de-elected, whatever. That doesn't matter. The point is, no outside lobbying group should have enough influence over the general electorate to basically like cast someone out, you know. And I think that's what's happening right now with the country, where if you don't fall in line with certain companies and their visions, or certain
organizations that have agendas, they put it against you and they get you out. Yeah. It's going to be an interesting election cycle. We'll see what happens. Kris and I will be covering it. Kris, I think you and I should be live during the election night, and we should see what happens.
Bro, I'm going to need some heavy. I'm going to be drinking like crazy, man. Because, dude, as I get older, I don't know if you know, maybe you're too young, but as I'm getting older, I'm becoming way more conspiratorial too. I'm just like noticing too many things happening in a certain direction.
I agree. That's why I've started to not trust any politicians. I don't trust Waltz. I don't trust Trump. I don't trust any of these guys. I would trust like business people more because they've done something, they've built something, they have an incentive for me to make money if I'm invested, versus the politician that's promising me they're going to cancel my student debt. You know?
Yeah. I mean, you know, each side has their own ways
100%,
of getting
100%.
votes. The Democrats with their freebies and, you know, debt forgiveness and all this other stuff. And then the Republicans are like, don't worry, guys, we'll cut taxes. And the problem is both of you idiots are just causing the national debt to get higher and higher. And what you're essentially doing is you're setting the country up for failure, man. But whatever, you know.
All right. So overall economy, you think August is tough, but rate cut happens and we'll rebound in a few months.
Yeah. I think we'll get a nice, healthy Santa Claus rally. I think a consumer relatively is strong. This is where we have to really look at the data and just say there are certain segments of the consumer that are weak and certain segments of the consumer that are doing absolutely well. And once you dig down into that, you can identify which companies that you want to invest in and which ones you want to avoid. You know, the thing that I said last time, remember, Peter Luger's versus McDonald's. Usually McDonald's is the one that you want to invest in. But right now you're seeing that the people at the upper end of the income stream, they're doing extremely well. And so they're willing to go out there and spend and everything else. Well, the people at the bottom are suffering from high inflation, higher housing costs, you know, higher grocery bills. So the economy needs a little bit of a reset, where prices come down. Oh, one last thing, and I'm glad we're here. You know, Disney came out and said, "Oh, the consumer is weak," right?
Yeah.
What they failed to address, though, is that these guys have basically raised prices like crazy over the last 3 years.
In the parks.
You know, in the parks, you know how much it costs to go to one of these Disney resorts right now? It costs a mortgage.
It costs a
Dude,
mortgage.
I saw one TikTok thing with like this family and 3 kids they spent like $10,000 to go to a fucking theme park between hotels and accommodations. I'm like, $10,000. What the hell?
That's interesting. So they tried to blame the miss on the parks revenue on the consumer without mentioning they raised prices dramatically.
Yeah. I mean, the thing is, a lot of these companies, they had pricing power during all of this inflation, which made sense because they're like, oh, you know, our costs are going up, so we're just going to pass that off to the consumer. But I mean, the consumer has a breaking point where they start to say, you know what, let's look for alternatives. Yeah. Maybe we don't need to spend $10,000 at Disney. Maybe we go to like, and there's plenty of places you can go to. So I think that's the other thing with consumers too, where consumers are just being a little bit more pickier with where they're spending their money, because they're like, look, I'm tired of paying all this extra just to have like an okay experience, you know?
Right.
So it's not that the consumer is weakening. It's just the consumer has a lot more choice, and they're applying that choice. And the companies that were able to like exact a lot of pricing power are starting to kind of like diminish a little bit, and they're going to have to reset lower, and that's good. That's what we want. That's how inflation comes down, right? If Disney can raise their prices every 5% every year for the next 10 years, that's compounded, dude. No one's going to be able to go to Disney World other than the rich, you know.
And that means Disney's not going to be able to do that. They're going to have to.
No,
Yeah,
you need to have, you know, a little bit. I don't know, man. At this point, I think there's competition coming. There's all sorts of, like, the consumer is probably going to be choosing other places to go. So,
do you like Disney stock at all here or no?
To be honest with you, I kind of do. They have really changed up some of their movies. I was looking at their like movie schedule, like what's coming in the next few years. And some of the movies are actually looking like kind of appetizing, that, you know, they could actually cater to a broad range of audiences. My only thing is they really need to kind of like tone it down on the woke messaging a little bit. I know that a lot of people in the comments are like, oh my God, Kris is anti-woke. He's far right. Okay, whatever. That's what you think.
Dude, I got called a liberal yesterday for saying Twitter instead of X.
Yeah, dude. Everyone.
It's like, oh, he said this is his political bias. He's calling it Twitter. I'm like, what, dude? Like, people assume so quickly over things.
Everyone has picked a side, and if you go even an iota on the other side, they come after you, dude. And it's at this point, I'm over it. I really don't care. You know, I'm gonna say what I have to say, and that's it. If you don't like it, you don't like it. If you like it, great, keep listening. Whatever. You know, that's how America works. So
right. The recent film Inside Out 2 that did really well in the box office.
Dude, my wife and her best friend went to go see it. It was really good. The thing a lot of people are forgetting is if you make a good movie, people will go to the theaters and see it. Top Gun, people went to go see that. Wolverine and Deadpool, everyone went to go see that. You know, so make quality.
They made
movies.
the Dawson Creek movie. People would be there.
I don't know about the Dawson Creek movie.
So on Disney, your bull case is content, then I would imagine, like Disney Plus, etc.
I think there's a combination of things. Disney Plus is now GAAP profitable, so that's good. Their linear networks, the bleeding has kind of tampered down a little bit because that's been one of their biggest operating levers. This weakness in the parks is there in the short term, but the thing is, like, they just need to figure out a better pricing strategy and also work on, you know, cutting costs. Like, Disney has been one of the companies that's just not good with how it operates in terms of running costs, and that's why Nelson Peltz was trying to get into the board and saying, look, there's plenty of places where we can start cutting, you know, and basically return Disney back to profitability again. Let's not keep doing shit and look at the amount of spending, $18.9 billion. Like, seriously, what are y'all spending that money on? I want to know. You know?
No, I'm curious too. Well, it has to be content spend or something. Like, that's a lot of money just on expenses.
Yeah. So I mean, this is where I think if Nelson Peltz had got in, I'd be a lot more bullish, actually, because I think guys like him can come in, shave off all the areas that are costing Disney a lot of money, that not necessarily makes, you know, is providing any real value, and then go from there, you know.
All right. So, Kris, you're our Tom Lee. You're bullish on this show. This is my CNBC. You're my Tom Lee. And when you go bearish, we'll know shit's hitting the fan.
We'll see.
So
We'll see, man.
Stay bullish. Thank you, Kris. Let me put Chris's Twitter in the chat. Make sure you are following him. He also has a Patreon that you can subscribe to.
Yeah.
And get all of his deep dives. His Patreon link is in his Twitter.
Later, guys.
Later, Kris. Thank you. Bye. All right. So speaking of Tom Lee, we actually do have some new footage of Tom Lee. This is about 5 minutes on how Tom Lee's thinking about the carry trade risk along with the potential of a recession. So I think let's watch that. This came out literally yesterday, and we'll see how he's thinking. This is his first interview post his 5% rally call after the Fed, FOMC. And so he's kind of breaking down, talking more deeper about it. Real quick, let's just take a look at stocks. Palantir is running. Palantir $28, $27.97. If we have the same 28 resistance to tomorrow, that's going to be, I mean, today that would be funny because yesterday it was like, it took almost 30 minutes to get above 28. Robinhood back to 17.17. I did get some Robinhood while my orders went through. So I picked up some Robinhood, set at around 1684, I think was my price. Right back to 1715. It could fall right back down to 16, but I just think the risk reward is easier on the side of reward. For Robinhood, Shopify 66, Nvidia 102, and then SMCI. SMCI back up to 500, but still struggling, given it's down 50% now in the past couple months. All right, let's listen to Tom Lee. Yeah, Bros is down. They reduced guidance on the consumer, and that's why Dutch Bros is down.
Do you have any worry that any cuts by the Fed might amplify the carry trade risk that we've seen with the yen, sort of, a stronger dollar type of effect, and just like make things work, make the things that we saw on Sunday even worse?
Well, yeah, that's a good question. I mean, the Fed doesn't want financial instability, but a stock market going up 20% isn't really concerning the Fed. What concerns them is a misallocation of capital. And if capital is put into financial markets because no one wants to do CapEx, or nobody wants to expand a business because the Fed might crush the economy, we might have to think that by cutting interest rates, the Fed is essentially allowing capital to be put back into the real economy. I don't know a lot of CEOs who've been doing CapEx, because why would they invest more at a time when the Fed's tight and is worried about inflation and could crush the economy? I mean, that's not the kind of environment that greenlights capital spending projects. So I think, believe it or not, it's actually has been an impediment to economic growth, but it also has amplified carry trade, because you're right, people seek yield when you have an artificial high cost of money.
Tom, can you make the Steelman the argument for that this wasn't a growth scare, that we are maybe in the beginning of a recessionary period of time, that things get more bearish from here? If you were asked to kind of Steelman that case, what would you say?
Okay, so let's flip the hat. I would say, what? A recession is, expansions don't die of old age. They get killed by the Fed, right? So did the Fed stay tight too long, and it's already killed the economy? Well, that's one way you kill an expansion. The second way, of course, is you create a shock. I mean, let's look at both, but is the economy already in a path to actually crumble? The area that's weak right now, we already know there's 3 areas of recession. Automobiles, auto sales is in a recession. Whether it's used car prices are going to free fall. Tomorrow we get Manheim, but used car prices have been tanking, and automakers raised prices with greedflation. Now there's inventory piling up. Auto delinquencies are up. That's in pretty bad shape. The second area that's in bad shape is durable goods. I mean, people aren't buying appliances, things that installment debt. I mean, it's just too expensive. Credit card debt is, cost of credit is 25%. I mean, who's going to buy a dishwasher with those kind of costs? And the third is that housing activity is in a recession, because it's prohibitively expensive to get a mortgage now, and home prices have gone up. It's not clear if they're going up because of tight supply, or if it's for whatever reason, but it's gone up, and it's hard to get money. So could those 3 drive a recession? Absolutely. I mean, a durables recession and housing is really sometimes where you get a recession. So is housing so far gone that is impossible to turn around by the Fed? We'll see, right? I mean, if they're worried about inflation, they could put a death spiral in that part of the economy. There's not over investment anywhere else. I mean, the stock market, like, let's say someone thinks it's a bubble. It's not really what causes the recession. It's that too much capital is raised in a bubble, and then it's misallocated. That's what happened with the .com. And then, of course, there could be a shock. I mean, like what you're pointing out, is the yen carry unwind, is that a shock? I mean, that could be a shock. Is if oil supply is massively disrupted, that definitely could be a shock, right? I mean, oil could go either way. It's either going to go up a lot or down a lot, but that could create a shock too. And that could just, and that could interrupt trading of currencies. I mean, currency stability is important too. So I think it's possible that you could have a recession, but really, like, as I talk it through, I would say the housing thing, I'm not as inclined to think it's going to lead to a recession, because we know there's a lot of pent up demand. It's not like you've exhausted demand, and mortgage rates would drop as soon as the Fed starts cutting, especially adjustable rate. But could oil spike? You have to get oil to around 250. And around 250, the debts, the cost of gasoline as a percentage of household income is enough to be recessionary.
Have we ever seen
that?
Have we ever seen a growth scare like this in the past, Tom, that would be analogous? Because like just looking at the VIX, we see 2008, 2020, and obviously a lot more happened after the initial like VIX spike. A lot of negative things, right? And it just seems weird that the market, like the whole thing feels weird. It feels weird that the market is so on edge, so fragile, like just a little blip and then boom, the Japanese stock market is down 12%. And like it feels like we're in a sort of a strange time. And it may be getting back to kind of the .com bubble, right? AI has been on an absolute tear. That could be in bubbly territory. But like just in general, is there anything like this that we have seen in history that would be analogous?
Ryan, I want to just point out a couple things. I'm not trying to oversimplify this, but because I've been following equity markets for 31 years, 32 years actually now.
That's approximately three crypto lifetimes, I would say.
Yes, that's right. I'm like, then yeah, that means I'd have great grand crypto children.
Yes.
They say bull market.
Tom Lee looks tired, bro. He looks tired because he's probably been having this same conversation with like hundreds of institutional investors, and he's probably tired of just explaining to them, everything going on.
They say bull markets take the escalator up and the elevator down. So big corrections like this are more associated with a bull market than a bear market. In fact, if you look at 2008, for instance, when that market was topping, it was bleeding and bleeding. And then it was towards the end that you were having these get me out of everything declines. Whereas this S&P was essentially fell over 3 days. I mean, the correction, might be 2 weeks, but it was just 3 days of sheer horror. And those kind of panics definitely happened. In 2018, you had the tantrum around the Fed because Powell was raising rates, and COVID created a huge decline that was quickly reversed. I mean, that was the fastest decline of 45%, I think, in history at the time, right? And as you know, the mistake people made in 2020, and we were dealing with the blowback, was everybody was like, you know what? This is the knock-on effects on the economy is just getting started, and we don't even know if how to contain this disease and how deadly it's going to be, how you're going to fix it. But the stock market bottomed in March 2020. That was 6 months before the vaccines were even out. So
overall, Tom's bullish, and he's making the same arguments that we've been talking about, which is that when the VIX spikes and you get peak fear, peak panic, Robinhood 1730, Robinhood is now green, Palantir 2 cents away from 28. Let me check the resistance there. The argument is the same, that in a bull market, you get these violent rundowns, and then you slowly come back up. But in a bear market is when you slowly go down. We're not slowly going down. There you go. 28 on Palantir. We are violently going down and then slowly recovering. The next wall on Palantir, 24,000 shares at 28.15. 25,000 shares at 28.50, 23,000. And then at 29, there's like 5,000 shares. So really 28.50 is the obstacle to get through for Palantir. Let me read this super chat. Just got it by Jonathan. Jonathan, thank you for the $50 super chat. It really means a lot. Amit, I've been a member since you were below 8,000 subs. I'm traveling in China this week. I woke up at 3:30 a.m. China time just to listen to the Palantir earnings call with you, and the Palantir Weekly crew wouldn't miss it for the world. Thank you for all that you do. Thank you, Jonathan, for that. It absolutely means the world. This is why Palantir is a special company, dude. For someone to wake up at 3:30 a.m. in China and actually interrupt their sleep just to join the call and listen. Like, that's a big deal, dude. And I think that is why this community is going to be one of the most smart communities on the planet, but also one of the most authentic communities on the planet, because you're actually following a company that gives a shit about their investors, about the product, about the customers, about the users. And ultimately, that creates a really good mix in terms of everyone realizing the magnitude of the opportunity here. So $28 on Palantir. And a large part of this whole community building thing has been the ability for us to crowdsource information together. Like, I mean, we don't do as much like deep diving as we did before on Palantir in terms of finding little details, but in 2022, when the stock was at $6 and everyone was down 90%, like we would find anything. Like the amount of Google alerts people had set up for like PLTR just to like know that there was some hope we were coming back to life. And that's when, the community really bounded together and we were able to make some money on this thing and ride it back to the top. 28 on Palantir, up 6.4%. Airbnb is up 1.4. Robinhood now 1736. So you got a reversal there from 1670 to 1736 within basically 20 minutes. Crazy swings back and forth. S&P, oh wow, S&P 528. S&P trying to go to 530. Did we get some data just now? Did we get some data or anything? Why did that go up? Amit, can you explain buy and sell walls for us that only understand enough to be dangerous to ourselves? A buy and sell wall is just how many shares are willing to be sold at a certain price. So when I say 28.50 has 25,000 shares, that means at when it goes to 28.50, let's say one guy has 25,000 shares. It's probably a multitude of people that will be executed. They have a limit order for 28.50, and immediately you need the stock to be sold at that price for the guy to get his order filled, but you need someone to buy it from that guy at 28.50 or that girl, right? And so you need to be able to get someone to tear down that wall in order for the wall to be broken to keep moving up. You need a buyer for the seller. So that's all what a sell wall is. I don't see any new data. That we did get a little bit of a revert, like S&P up 1% right now. I feel like it would be on some macro news. Taiwan exports are easing a little bit. South Africa factory output drops more than anticipated. India leaves rates steady. Oh, so India didn't raise or lower rates. India has 6.5% rates. Wow. India's higher than us. Yeah, there's nothing. There's no real news. Markets are just up. We had 8:30 news. Yeah, we had the jobs report. Maybe the market's now condensing the jobs report. Bitcoin's pumping as well. Where's Bitcoin? Where's BDC? BDC. Wow, Bitcoin is trying to go for 59. Holy crap, dude. This thing was 49,000 on Monday. Huh. Interesting. I feel like something just happened. That's weird for it to go up like that. Yeah, we do have the 30-year bond at 1 p.m. That could ruin everything again. S&P has been trending up all morning. That's true. Amit, can we look into the HIMS sudden drop? I went through HIMS earnings a couple of days ago. I thought it was great. I mean, they acquired some company, 50% year over year, increased guidance, profitable, all that stuff. I think the stock still year to date is up a lot. HIMS stock year to date, yeah, it's up 56%. So I think this is just a natural violent movement you're going to have when a stock's up 50 at one point. I think it was up like 110% or something. I don't think there's any fundamental reason why it's down. Valuation wise, I think even at 17, 18, 19, it was still relatively cheap. So because I'm in I'm in a group with a couple people that care about hymns a lot, and they there's one guy swears by it. He's like, dude, this is like the next fucking Eli Lilly. He's like, so when it got to 20, he was like, nope, still cheap. Maybe he was a little too biased, but I think some people that do a lot of due diligence feel that like 20 was a good range for it to be in. So I don't know why it's at 15, but if you're in hymns, I don't know if this is the worst time to DCA on this. Beyond Meat up 20%. Beyond Meat. Okay, that one's up 20%. Palantir 2801, Robinhood 1740 up 1.6, Bumble down 34%. Yeah, dude, Bumble. I would not touch this. Yeah, I would not even go close to touching this. This is they have not proven they can actually build a product that people really will continue to use. So. This is just the dude. This was a 2021 ZERP company. They shouldn't have went public. Like, there's no reason that they had to be. There's some companies that just don't need to be public. Like, and it would be better if they just stayed private. They don't have to worry about hitting numbers every 90 days. Like, that's a ruthless game to hit your numbers every 90 days. Like, and to beat expectations. And if you miss by 1 penny on one random metric, boom, you're dead. Like, that's it. Like, you just have to have so much respect for public CEOs who go through that shit. Like, it's tough, dude. Zillow is up 17%. What was Zillow's earnings? They did beat. I looked at them yesterday a little bit. Zillow. They're not buying and selling homes anymore like they did in 2021. Zillow beat EPS by 44% and beat revenue by 6%. Okay, so that's good. I mean, 44% beat is not bad. They did say it's a little bit of a challenging macro environment. They said their go-to-market's getting better, cost discipline's getting better, 13% year-over-year revenue growth. See, it's interesting. The market's able to give a premium, or I don't know if it's a premium, but the market's able to give like gains to some of these stocks if they're beat up, even on uncertain macro. And maybe Zillow is going to benefit. I mean, mortgage rates are the lowest they've been in the past 6 months. I don't know if people knew that, but that's in the low sixes. When we cut rates and mortgages go down to maybe 5.5, 5.75, Zillow should get a huge boom from that. They're just going to get a lot more people interested in buying and selling homes. And that should be great for Zillow. Robinhood 28 or Palantir 2815, Robinhood 1750. So you got a 2% reversal on Robinhood. Palantir up almost 7% back in the high 28s, which is awesome. It was there kind of yesterday. So now it's getting back here. These companies go public to let founders and early employees cash out at high valuations. I agree, dude. Like, some of these stocks, they just don't deserve it. Bumble is not one of those that deserves it. And the problem is they use retail as liquidity, which is the sad part, right? So you got to really know. That's another thing with Airbnb. I mean, Airbnb is a much more legit company than Bumble, but it's a VC darling. Stripe, I am not buying the Stripe IPO. It's a VC darling. Reddit. Now, Reddit, realistically, Reddit was cheap at 34. I mean, it's like a 5 billion market cap or something, but I still felt like it was a VC exit liquidity. Like I really don't like buying these Silicon Valley startups that go public unless they're like so amazing, because you know that the VCs were in this thing when the stock was like 5 cents. Now it's like $50. So they're making a 10 trillion% return, and you're hoping to get like the stock to go from 50 to 70 if you're in retail. And so I feel like the game is skewed against you a lot of times. Dell up 3% back in 90. IWM 2% up. Small caps running a little bit. AMD 134. This one was almost at 118 the other day. Caterpillar's up 2%, and then Costco up 3.5% as well. Do you think Hood can make it to 22 on October? Yeah, well, that's the other thing. They're having an event in October. I'm not going to be there. I'm going to be in India, but it's in Miami. That's definitely when they're unveiling the web trading app. Vlad did say, so Vlad said 2 things yesterday, or he said a bunch of things, but here's 3 things he said. He said overnight trading is now 30 billion in volumes, which is up from 20 billion a couple months ago. Number 2, he says retail has been buying the dip. He says their data shows that retail has been buying the dip on this market sell-off. They were specifically asked about the market sell-off, and he said our data shows retail has been buying. And number 3 is that they're introducing, they have this like summit in Miami in October. That's when he said that's going to be bigger than the gold event. So I imagine they're unveiling a lot of things there, one of them being the web trading app. And that should be another big thing to add to momentum along with rate cuts. So I think 22, yes, is possible if they can execute well. Don't forget about Snowflake. Yeah, that's true. Snowflake went public Went up to $400. The founders make a lot of money on this one. Snowflake now at 120. It was at 109 on Monday. So Snowflake also got hit. Bitcoin 59K. What is happening, dude? Why is the market turning? Does anyone have any idea? We just had a full revert. Like when Kris was on, Palantir was struggling at 27. Robinhood was at 1680. And Bitcoin was like 55. We had a major reversal since then. And I'm trying to see why. The Big Sour, thank you for the super chat. And maybe you should do a deep dive on PLMR. It's a growth and profitability is insane for an insurance company. I also think it's a good hedge. Yeah, we looked at the technicals on that on Technical Tuesday. I'll look deeper into it because Jason kind of thought it was interesting as well. So we will look at PLMR because a lot of people hate Meet Kevin. Kris pumped it. Dude, Meet Kevin is so mad. Like, he just wants a crash so badly. And I'm like, dude, we kind of got it. We got the crash on Monday. Like, the VIX went to 66. Like, what more do you want? It was bad. But I don't know. I feel like he wants more. Okay, so this is his latest moves on the PP ETF. So let me pull that up for you guys. So this is what he did yesterday. Or sorry, this is August 5th. Wait, do I have more recent than August 5th? Let's see. No, so the last time he made any moves was August 5th. So let's look at it. Okay, so what he has done is so he sold a little bit of Robinhood, 1%, sold some Microsoft, sold Apple, bought the 30-year treasury. Okay. He sold some of Intel, he sold some of Meta, sold some of McDonald's, sold some of Amazon, sold some of Apple, sold some of AMD, sold some of Nvidia, sold some of Enphase, sold some of Ubiquity, bought the 30-year treasury. Huh. So he's just getting rid of everything and going to cash. Like pure cash and obviously T-bills. So he's like putting his money where his mouth is. He really thinks shit's going to like crash. He's not buying. I think he did say yesterday he would buy before the election if he thinks things get better. But he's not in this market right now. All right, bro. I guess we're going to see. I do agree though with that argument. I agree with you, Don, as well. Like maybe the real rally happens after the election, when we have certainty around who is the president of the United States. Robin at 1760, Palantir 2820. So maybe we do need to wait a bit. But if we get a good CPI and growth is not slowing down, then maybe this stuff starts to subdue until we get the election. Now, granted, it's also a question of how the market's going to price in the election odds. Like right now they have Kamala 50-50 with Trump. Some of them have her a little bit higher than Trump. So really whatever the markets think about that is going to determine a lot as well. What else? What else do we have? I want to see the Robinhood upgrades. I'm pretty sure they're out there. I don't have the source for them, but I think those upgrades we'll see as they'll come out. Bitcoin. Yeah, Bitcoin really trying to get to 59. If we get back to 60, 62, that would be nice on Bitcoin. Getting back to that 60 level. Meet Kevin thinks that the Fed will want to drive us to a recession. Yeah, his argument is the Fed wants a recession more than they want inflation. I agree with that. I think the Fed is going to be able to potentially drive us into a soft landing, not a recession, even though inflation is coming down. And again, inflation is coming down. I think that problem they solved. The problem is growth now. And the jobs data we got this morning showed us we're in the right direction. So it is tricky though, dude. It's hard for Meet Kevin to necessarily be right. It's also hard for him to be wrong. Like it's a very tricky situation. And it's going to take a lot of like data coming out over the next 2 months to figure out where the market. Oh, I think we'll know by like end of September where the market thinks they want to go. I know we still have the election, but we should have enough data, 2 CPIs, rate cut decision for the market to figure out, all right, are we going to really do the Santa Claus rally, or are we just ending a 7-month really awesome bull market? It's hard time to time a thesis even if you're correct. Yeah, that's the scary part. It's hard to time a thesis even if you're correct. And you kind of either you're in cash or you're making one big bet to the upside or the downside. Or you're just long and you'll just wait for the next 5 years for everything to play out. But it is hard to time the thesis. All right, let's go to the suits. Let's see what the suits are saying on the CNs of BCs and see what's up there. Oh, this guy's been bearish for a while. Okay, let's see what he has to say.
Is going into late summer. You know, you mentioned the job market, the weekly jobless claims this morning. I mean, they were just a little bit below expectations, but seems like the market seized on that as evidence that the labor market is not really deteriorating very quickly. You mentioned also, you know, lagged effects of Fed tightening. There had been a sense out there that we have a structurally tight labor market this particular cycle, and that when the Fed starts to trim rates, it's not going to be one of these aggressive easing cycles and the terminal rate's going to be higher. In other words, there was a different range that we were operating in this cycle versus the 2010s. Does that hold up to your sights right now?
It does, Mike. I think it's important to remember that the 2% inflation target has always been a target. It was really only discussed when inflation was structurally and serially below 2%. It was never really discussed, but the average inflation rate over the past 60 to 70 years has been about 3%. That's more normal. 2% is a very high bar. Clearly, I don't think the Fed has any sort of suicide pact with 2%. It's going to be content if it gets closer to 3 and in that range. And so I think given where the real Fed funds rate is now, it seems reasonable that the Fed should ease just because it's too high. But I do think the terminal rate is going to be lower than what people have been accustomed to. It's very unlikely to be 0 or 1%, in my opinion. Hopefully, if it is, we've clearly the Fed has tightened too much and we've got other problems.
Yeah, I mean, shifting from monetary policy to fiscal policy, especially in an election year where we see some of the political volatility starting to inject itself into the market here, how does that continue to play out?
Yeah, I mean, Morgan, it's a great point because there really has been very little coordination between fiscal and monetary policy over the last couple of years. I mean, in many ways, it's made the Fed's job harder because you're running budget deficits of 7% of GDP. All administrations, Republican and Democrat, try to grease the skids for their reelection. I would say the Biden administration is probably taking this to a level I haven't seen before. Again, with budget deficits of this magnitude, with student loan forgiveness, with employee retention tax credits, with the manipulation of the refunding schedule to include many more bills than notes and bonds. And so that also makes it difficult to see a recession or a slowdown in the economy in the next couple of months. The only issue is that the bill eventually will come due, that there is a limit to what you can expect. There is a cost to keeping the economy out of recession at all costs, and that is, generally speaking, higher inflationary expectations over time.
So how does all this shake out in the bond market? Because presumably you're going to see a normalization in the yield curve. We're starting to see some signs of it. We were talking to a bond guy on the show earlier this week, and he was saying, this is where the volatility is going to come. And even just that process of normalizing it is going to create a shakeout across asset classes. And I just wonder how much that needs to be gamed into investment theses here.
I think for the longer term investor, I think you're absolutely right. I think it's very difficult, in my opinion, to get really bullish on the long end of the curve here. Just again, given the fact that our interest expense alone is approaching about 20% of tax revenues. So generally speaking, whenever you've gotten to 14, you've had to change your ways. You've either had to pull back on spending, or you saw meaningfully higher long-term interest rates. So regardless of who the next president is, they're going to have to deal with the idea that we've funded a lot of our debt short as opposed to long. And that is that's going to put structurally higher pressure on long-term interest rates. And
which means we should hopefully get that rate cut, because we cannot afford, if we're selling mainly short-term rates, Bitcoin 59,000 or short-term bonds, because they have higher rates than long-term bonds, to keep rates this high. That's what that means. And we need, it's fucking time, dude. It's time. Like, this is not a Green Day song. It's not wake me up when September ends. It's wake me up when J Powell decides to cut these rates, because it's time to cut them. We're seeing a reversal, guys. Bitcoin 59K Zillow 49 up 18%. Palantir up 7%. Robinhood 1756. Snowflake 120. I don't know why we're getting this reversal, but like pretty much everything's Nvidia should be at like 102, I would guess. Nvidia 102.2. There you go. Market's reversing. Market's reversing very nicely. I still don't know the macro data that came out, dude. Nothing came out. There's no news I'm seeing. I guess it was just a sell-off into the morning, sell-off into the jobs data, and then people bought the dip and people start coming in, and that's what we're seeing right now. Russian President Vladimir Putin signed a law legalizing cryptocurrency mining in Russia. Maybe that's what has Bitcoin up at least. I guess Putin realizes that they need to pay off some of their debt with Bitcoin eventually. So there you go. You got Pooty who thinks we need some Bitcoin. I wonder when China's going to unban it. Oh, Tesla's at 198. We haven't even looked at Tesla all day. Tesla's been boring ever since it fell from 270, dude. Like it really made the best run of 2024, 130 to 270. And then Elon's like, yeah, we're going to do the event in 2 months. And then boop, it just went to shit. Now, granted, I think even if the event did bad, even if they didn't delay the event, the problem is, the NASDAQ collapse. So that still would have hurt Tesla. But the delaying wasn't helping. Oh, yeah, it's 8-8. It's 8-8, dude. Where's our Robotaxi event, bro? Where is our event? I think it's gonna be a good event on 10/10, and I think they're gonna really surprise people. If Elon doesn't get FSD out by next year, like real FSD out into the world, legalized, this is gonna be 2026, 2027. That means the stock is gonna hover from like 120 to 230 for almost 4 or 5 years, almost 6 years at that point. Like, I think 2025 is the time. It's got to get done. And they have all the resources. He has all the money, XAI. He has everything at this point. So I think 2025 is the year where it becomes real. Oh, it's your birthday? Oh, shout out to Mind Potential. Happy birthday. Happy birthday. I will be turning 27 in October, so that'll be fun. I think that's officially late 20s, right? 26 is like late 20s because it's after 25, but 27 makes it more official, like your late 20s. So I will officially be closer to 30, which is going to be cool. Did you see the marketing campaign from OpenAI with the Strawberry account? No, I didn't see that. I heard about this, but I don't even know the controversy with this Strawberry thing. But I think they deleted the tweet, right? I didn't get to look too much into it last night, but I did see something like that. So yeah, I don't know if that's happening. Happy early birthday, Amit. Amit is your same day as the Robotex. No, I'm October 27th. Elon's in the market open. They're doing 10/10. I'll be in India, dude. I forgot, dude. I'll be in India. I won't even be able to cover the event. I won't even 10/10, right? Yeah. What's 10/10? Is that a Saturday? 10/10 is what? 10/10's a Thursday. I'll try to stream it, but it might be a little hard to stream that one. But let's see. I would really want to cover that, dude. That's a big one. We got to see what the fuck is going to happen there with Elon. Mind Potential says, thank you all. What a great community. Yeah, dude, it's been super awesome just growing this whole community. We have a bunch of people here in the chat. Let us know if it's your birthday, by the way. Let us know every day. I think it's getting to the point where I think every other day someone has to have a birthday, right? Especially in the high, like October is going to be crazy for the chat because October is the highest month of the year for birthdays, I think. Well, you know what? We're going to use AI. We're going to figure this shit out. So here we go. ChatGPT, which 5 months have the most birthdays? I think October has to be there. There you go. October. There you go. So August, September, July, June, and October. I feel bad. Some people are going to get offended by this, but I don't like the January birthdays, dude. I kind of feel bad if you have a January because January is like Dude, everyone's so focused on the new year. I know we got a ton of January birthdays in the chat right now. They're going to be upset, but maybe you'll agree with me. January birthdays are not that fun, dude. It's like, it's January, bro. Like, people are getting back to the gym. You know, they're setting their New Year resolutions. Like, no one cares about new birthdays in January. March is just whatever, you know. April is okay. It's like a little, you know, it's a little nice outside. I don't really love the summer birthdays, but it's good if you're like, you know, if you like to be outside during the summer, you get to have parties outside. February is just like, I don't know, dude. February is the shortest month of the year. It's just not, it's, you know, not that exciting to me. I think October, November, December, the best months for even September. I don't really like September birthdays because September is right before October. Like, you weren't good enough to be in October. So you have to say, like, I have a friend whose birthday is September 30th. Like, dude, I would hate my life if my birthday was September 30th. I was so close to being October 1st. And now I'm September 30th. So I'm an October baby, dude. I love October. September is the highest because people have sex during Christmas and New Year's. Interesting. Okay. Makes sense. We got a bunch of Januaries here in the chat. What, Zocol, you got a January? Dude, Januaries, you got to admit, dude, Januaries are not the best. They're just not. I'm Feb 14th. It sucks. Well, I actually like Valentine's birthday because, you know, if you have a partner, you can make it special as your birthday and Valentine's Day. So I don't think that's the worst. My mom is December 22nd, so that's right before Christmas. I like that. My sister's November 18th. My sister actually has Mickey Mouse's birthday. So she was born on the same day as him, as the character was birthed by Disney. But that was November 18th. And my dad is June 13th. So my dad is totally the opposite. My dad is not in the October, November, December. He's in the Gemini camp. So he has the June birthday as well. We got a bunch of January and Septembers. Again, nothing wrong with those months. I just love October, dude. I feel like I was meant to be born that month. Now, granted, I'm a Scorpio, so maybe that's why I like it. You know, I got to show you guys this picture yesterday, or this screenshot. I was going to tweet this, but I didn't get a chance to tweet it. Someone said, can I find it? Dude, I have so many screenshots. My whole day just consists of screenshots. Like, if I got paid for every Robinhood screenshot that was on my phone, I would have $1 million, bro. Where's the comment? Okay, I can't find the comment, but someone was just like, dude, I definitely took a picture of this. They were like, okay, I can't find it. But the gist of the thing was like, they were like, just found your channel. I don't know why I'm watching, but I keep watching. And I was like, good. I like being very esoteric. And so I was going to tweet, like, that's a good word to use. Esoteric is one of my favorite words. I told you guys a story about this a while ago. Some of you guys remember, some of you guys might not. But in college, I was at a party and I told this girl she's very esoteric. I don't know how I thought of at the moment to call her esoteric. But it means kind of like mysterious, right? And so when the guy was like, I just found your channel. I don't know why I keep watching, but I keep watching it. And I was like, good. That makes me very esoteric. Makes it kind of like mysterious. I called her esoteric. Dude, Niagara Falls, right there. Niagara Falls. You guys know what I mean by Niagara Falls. Niagara Falls, right there. Dished out that word, Niagara freaking Falls. That word, there's something about that word, bro. Esoteric, immediately. Game over. GG. I'm done. I'm in. Easy. So I don't know. I think that word has an effect. A very special effect. My son has your birthday. Oh, wow. I love it. That's so cool. October 27th, dude. It's a good birthday. 10/27. 10/27. 27. Like that number. I told you guys my thesis on number. 27 is the coolest number in the world to me. I think it's Amit turned into Niagara from crying after the rejection. Yes, that's what it was, dude. That's what it was. Dude, no, it was cool though, because it was cool, dude. Like she was a friend of a friend I had. The other friend was also a girl, and like we're at this party, and then like I'm sitting across from her, and we're kind of like making eye contact here and there, but we're not really like talking. And then finally, I go over to sit next to her and her friend, and I'm just sitting there, and then I don't really say anything to her, and then I look over to her, and she's like, "So you're just gonna sit here and not talk to me?" And I'm like, "Boom." I'm in. It's done. Very simple. That's all I needed. That's really all I needed. That's like sometimes guys, they just need a sign. They don't want to be a little too pushy and aggressive and stuff. Like, so they just need a sign. And as soon as he said, so you're just going to sit here and not talk to me, boom, I'm in. All right, you're esoteric. And then it's Niagara Falls. And then it's just a hell of a night. And then it's just a hell of a fucking night. So that's she didn't know what that meant. No, she's very philosophical. She was philosophical. Like she cared about philosophy and stuff. So she did know what that meant, but she was impressed because like, what guy is calling a girl esoteric, bro? Come on, bro. Most guys don't say that shit. Like, you know, you got to be a philosophical guy. You got to have a very acute vocabulary to be able to deploy those types of words and have that particular type of vernacular to amalgamate a potential that creates emotions that are, I'm trying to find another big word. You see how I'm trying to pause? I'm like trying to find another big word to use. I'm like, all right, I got amalgamate. I got esoteric. I got vernacular. I'm like, I don't have any more big words. I'm done. I can't. Now I have to say the simple words. But the point is, when you use a big mysterious word, Niagara Falls, S&P at 526, S&P at 526. Then I proceed to ask the young lady if she has ever been to Massachusetts. Yeah, I'm never talking about Massachusetts ever. You see, I still can't say it. Some people think, oh, Mitch just acting like, no, dude, I cannot say that fucking word. I don't know how to say it. I don't know how to say Massachusetts. I just can't do it. All right, what else do we have going on? Dude, I don't think there's any other big news. going on. Palantir 2834. Did I miss that? I feel like I was just there and it was like, where's Palantir? Palantir. Oh, yeah, 2834. We're right back to where we were yesterday. 2840, up 7.7%. Palantir is being resilient, dude. Being very resilient through all of this. Like, you would expect this macro turn down. Palantir stuck in like 22, 23. Nope. The street is willing to buy. They are willing to buy this word. Market kind of reversed just a little bit. They reversed. Yeah, I'm never talking about tortoises or Massachusetts with a girl ever. Like, ever. Just can't do it. I just can't do it. Esoteric doesn't mean mysterious. Well, it kind of means mysterious. Esoteric. Let's look it up. It means like something close to it. Esoteric definition is okay, hold on. Esoteric definition. Intended for or likely to be understood by only a small number of people with specialized knowledge or interest. Yeah, so it's not literally mysterious, but it's about not being well known by the masses. And it's a sexy word, dude. Esoteric. Like, there are certain words that are just sexy. Another sexy word, Palantir 2840, Byzantine. I used to call it Byzantine, then I realized I was saying it wrong. Byzantine. It means complex or intricate. Now, it's not. It doesn't sound as sexy to say as esoteric, but Byzantine, it's from the Byzantine Empire, but it means complicated. It means excessively complicated. So next time something's complicated, just say, oh, wow, this is very Byzantine. Palantir is esoteric. Correct. 2844 on Palantir. Do you think we make, let's see if where's the resistance? Is there a chance to get to 29? Is there a chance? The wall at 2850 is 50,000 shares. So that's going to be a little tough. And then at 29, there's 20,000 shares. So we just have to get through 2850. Amit, how the hell do you know how to say these words no one has ever heard of, but not common words? You're killing me. I don't know, dude. Like, it's a mystery to me. This whole market open experience over the past year has led me to believe there are certain things I just like. Volkswagen, I still can't say that word right. And I don't know, dude. Like, it's really weird. There are certain words that, like, my lips, like Massachusetts, I can't do it. I would really have to sound it out. In a normal conversation, if I say it, it sounds like I either have a lisps or like there's something going on. I just can't do it. Gyro. Yeah. Dude, I remember that one too. That was, I don't know. There's certain words. I guess there's just certain words. But the good thing is I can hopefully say other bigger words. I like being able to say a bunch of big words at the same time, though. It feels kind of cool, especially when you're like like ranting or you're trying to like analyze something and you start just throwing in those big words. Like it's fun. Amit, you are a sesquipedalian. Look it up. Sesquipedalian definition. This word means long-winded. Dude, you know what's long-winded? Dude, I feel like yes, you're right. I'm long-winded because I write. I talk like I write. I'm very long-winded when I write as well. Like I remember when I was little and I was like, you know, you have to write like a 5-paragraph essay in school and you have to like the beginning, the thesis statement, and the body paragraphs. Dude, mine would be so long because like I say so many words when I'm talking. So then when I'm writing, it all comes out as if I'm like talking. And I just like, and sometimes when I write a tweet, Palantir 2845, I have to like go back in the tweet and be like, do I need to use like 3 of these words? Like I'm like, there's no reason these words need to be here. Like I can take this out. So I am very verbose. I like saying stuff, I guess. Can you say recreation? Yeah, I think I can say that word, right? It's more like facetious, Massachusetts, physician. Those are the words that are tougher. Okay, what else do we have? Where's Robinhood? Robinhood 1719. Robinhood's still taking a beating. Guys, based on how I've increased my position in Robinhood, if we get this sucker to 25, I mean, look, maybe it's a blessing, dude, because I loaded up on the position even further. It was already big. I loaded up further. So if we get to 25, that's been like my main target. I'm gonna make a lot of fucking money, dude. Like I'm gonna make a lot of money. But now I don't know. I pretty much felt 25 was a no-brainer 2 weeks ago. Now I don't know. I still think it's very possible. And I think it can happen, but we got to get the macro to clear up. I do think those earnings were so exceptional that it justifies closer to 30. My biggest fear now is when does the macro clear up to finally get it above there? I guess we will see. We will see. And if it happens, we're going to Vegas. And we're putting all of it on black. And we're no, I'm just kidding. You have a limit on black. I didn't know that. Or what's it called? A roulette, black or red. They only allow you a certain amount, so you can't even go all in. I think it's like a $5,000 limit at most of these places, or like 25,000. I hate roulette, dude. I'm not that good at it. I'm not that good on it. I lost like $150 last time in Virginia. I was so pissed. I was like, damn it. I don't want to lose that 150. So there is some strategy to it though with the probabilities, but otherwise it's not the easiest. Is Tom Lee still predicting that IWM will hit 300 by the end of summer? I think he has not changed his. He's like me with Robinhood. We're both predicting it'll still do well. Now look, I think 25 Robinhood is way easier than 300 IWM, like orders of magnitude easier, but we're both a little less bullish that it's definitely going to happen. So he's bullish, but I don't think as much bullish. Amit, can you explain why we should not look at price to earnings for companies like Palantir and Robinhood? Okay, it's a very simple answer. Like this is the most simplest reason to not look at price to earnings. Like what I'm about to say, it cannot get simpler than this. Price to earnings is based on profitability. Palantir has been profitable for 6 quarters. Robinhood has been profitable for 3 quarters. They are just turning profitable. So when you look at price to earnings, looking at it on Google and seeing, oh, would you pay a 35 PE for Google? No, that's overvalued given its growth. But Google right now, PE at 21, that's relatively cheap. You're paying 21 times for Google's earnings, and you know they're going to put up certain levels of profit. Robinhood and Palantir are, barely putting up $100 million of profit a quarter. They're companies in their infant stages, and you're buying growth. Now, what has been my biggest concern with Palantir, and not just my biggest concern as a bull, but a lot of people's concern, is that the growth wasn't there. This quarter changed it. The growth is there, and the growth is accelerating probably close to 30% by the end of the year. So now you're going to pay a premium, and we talked about the cool premium many times on this channel, but you're going to pay a high PE and a high premium, but a lower PE than you were paying 2 weeks ago. Palantir's PE now 167 versus 230 because the growth increased. Same thing for Robinhood. Robinhood's PE was 220 or 240 the other day. Now it's at 120. Why is it cut in half? Because they just grew another quarter 40% year over year. And the forward PE is 32. So if Robinhood grows another 40% quarter, which is kind of what they were signaling last quarter, 35 to 40%, their forward PE is going to be 20. And so just because they're not profitable doesn't mean you ignore these companies, because then you would have ignored Amazon, Tesla, et cetera. But you don't look at price to earnings as the only basis for valuing those companies. So yeah, I think a lot of these companies, that's why when people on Twitter, they're like, oh, well, the PE, I'm like, dude, like every time someone says, look at the PE for a company that is just turning profitable, I start to think you're an idiot. Like I start to think you, like, I don't know, Palantir, wow, up 8%. I start to think you really are like either ideologically aligned to just like always buy a company with a PE below 5 or something with a dividend yield, or you don't understand how to look at growth stocks, because you cannot buy growth and want a low PE, because the whole definition of growing is being unprofitable. Like we're in this interest rate cycle where companies have been forced to become profitable, Robinhood, Palantir, et cetera, and grow, which is why I think they're exceptional companies with exceptional leadership. But for the far majority of 2010 to 2020, companies that were growing were not profitable. They didn't care about profitability because the street didn't care about profitability. They cared about top line growth. Now things have changed. So I think still complaining so much about PE is not the best idea. PE is useless when trying to evaluate rapidly growing companies. Correct. You just called Kris an idiot. No, Kris, this is actually Kris's argument about PE. Kris hates when people talk about PEs on growing companies because it's just an inadequate way of valuing them. Snowflake at 120, Bitcoin at 58,000. Nvidia, it dipped to 97 in the morning, but it's still above 100. So looks like Nvidia is not trying to give up that $100 level. SMCI also rebounding a little bit with Dell. They did get a bunch of price target downgrades yesterday, though. But SMCI here at 504. You think Rocket Lab will disappoint this evening? Okay, so what do you guys think of these companies that are going to report today? You can comment on any of them. So we have Rocket Lab after the bell. We'll be covering them. We have Unity. I think Unity. Okay, so I'll give my thoughts. I think Dropbox is going to do Trade Desk, I think, is going to crush, but I still think they might fall on some guidance. Paramount is irrelevant. Unity, I think, is going to do bad, but they've done so bad that they're probably going to do good, but I wouldn't bet on Unity. CleanSpark, I think, might shit the bed because Bitcoin's not been going up, but their numbers should be phenomenal because last year during this time was horrible for CleanSpark. So I think CleanSpark should be okay. And then I think Rocket Lab's actually going to do good. I think they're going to do, they already did the dilution. They got a bunch of contracts from Japan. I think Rocket Lab will do good. I don't know how the stock will react, but I think Rocket Lab will actually have a good earnings. SoundHound. So SoundHound did acquire a company today. SoundHound acquired a company for $90 million after raising $200 million, or sorry, $80 million. They acquired Amelia AI. Amelia AI. Amelia AI is an AI agent that businesses can customize for internal or customer use. So they acquired Amelia AI. I have no idea why they acquired this company, but so that acquisition probably will be brought up on the call today. SoundHound is growing 80% year over year. It's not profitable yet. So I think they'll still have good growth, but not sure how the street will react to it because it's still up a lot year to date. Elf has earnings today as well. Really? Elf has earnings? I feel like I would have known that. I don't think Elf has earnings. Okay, I guess we'll see Elf. I think Elf, I don't know about Elf, dude. Elf, makeup sales, consumers. I feel Elf is a premier brand, but I am a bit hesitant from that consumer angle. They did have taken a beating, though. They were at 230. Now they're at 180. They're still up from like 140 in the beginning of the year. It wouldn't shock me if this one just stayed flat. But I didn't even know Elf was going to happen today. Eli Lilly had it in the morning. Eli Lilly's up 13%. Eli Lilly crushed. Wow, Palantir. Look at Palantir. 28.59. There you go. That's the earnings pump a couple days later, folks. There you go. Palantir 20 and Robinhood at the same time, 17.50. Palantir 28.58, up almost 9%, dude. This bad boy might have a 10% day at $29. Let's see, dude. Not bad. 28.59. It's a much healthier 28 than yesterday. Much healthier 28.50 than yesterday. For those that also didn't notice, we got the Microsoft deal this morning for the government. Some people in the chat were like, oh, well, there's no numbers on it. There's not supposed to be numbers on it. This is not Microsoft paying Palantir. This is one of those deals where you get such good brand recognition because Microsoft's basically saying, yeah, it's giving you the cosign and they're giving you access to all of their customers in the government and giving you the opportunity to work with them. So Microsoft deal is really good for Palantir. It just impresses a lot of investors and deserves to probably get a premium. Wow, look at that. Palantir 2860. Not bad, dude. Let's see if we can hold it for the next couple hours and the 30-year bond auction doesn't go too bad. Maybe we close above 28.5, which wasn't a problem in all of July. We were closing above 28.5 pretty easily. Hood target for this quarter. Dude, I think it should be at $30 right now. So I don't know. For this quarter, end of Q3, I think end of Q3 is closer to 25. But we will see. I think that growth, dude, like Derek bought a lot of Robinhood yesterday as well. So he called me and he was just like, dude, like he was like, fuck the stock. He felt bad for Vlad. I mean, like, you know, Derek's been in business for a long time. He was like, that quarter was a quarter that's just like you just can't believe those numbers. And you just feel bad for the team at that point. You feel bad for the employees. You feel bad that the market's being stupid. And again, the market's being stupid because of the macro. I'm not saying the market is being stupid to be stupid, but it's just, you know, a lot of macro issues they reported into. But that was a quarter that, I mean, I got even Steve, dude. I've been trying to get Steve to buy Robinhood for a long time. Steve calls me yesterday. He's like, that was a good quarter. I was like, I know, Steve. That was good. Dude, I would have went heavier at $8. I called Steve. I remember I was walking. I was going to get some lunch. I called him. I was like, Steve, it's at $8.15. I'm thinking of buying a lot. And he was like, well, and he gave me the bear case. And I'm like, oh. And then it got to $9.50. And I was like, fuck it, Steve. I don't care anymore. Like I knew something was here. I missed it at $8.15. I'm buying it at like, I think I got a little bit at like $8.90 or whatever, but like at $9 I went in. So yesterday, even Steve called and he was like, this is just an exceptional quarter. Start a liquor chain and IPO. That would be a cool idea. Do you take profits or just hold long? Well, for options, you know, a majority of the hood position is options. So eventually I'm going to have to take profits by like November, December-ish. I'm going to have to take profits. But my goal is to take profits with the options and then go long the stock. Like, I think a Palantir Robinhood portfolio as like cornerstones of the portfolio, and then you round it out with 3 big tech positions. Like, that's kind of how I'm thinking of constructing. I think Palantir and Robinhood are the cornerstones. I'm getting more convinced. I know Robinhood is cyclical, and I know if the market turns, Robinhood is bad. I think I just buy more stock at that point. Like, I get it at really juicy prices because I think if they're becoming a pseudo Schwab, they're going to have such amazing reoccurring revenue 4 or 5 years from now where it's not going to depend on if the market's up or down. Like, that'll be a tailwind, but it won't be like the only reason to buy the stock. So if we get a market turn down and I get to buy Robinhood or Palantir again at 20s, like I think that's easy buy. So I think those would be the 2 positions that round out the cornerstones of the portfolio. Then I think the next one has to be Tesla, because I think if you believe in AI, you have to believe in the real like use case of AI, which is robotics and FSD. So I think you have to have some exposure there. And then I think honestly, the next one that should round out the portfolio, if we're thinking of 5 positions, is the S&P. Like you got to have a little bit of safety there, right? And like just like DCAing into the S&P, that's one where, you know, even if the market's taking an absolute shit and your stocks will be down 30, 40%, the S&P hopefully should be down like 15, 20% max, right? So you get the S&P in there. And then that 5th one, I don't know about the 5th one. If I want to big tech, I love Meta. Maybe it's Meta. If you want to get even riskier, maybe it's Rocket Lab. You go super risky, you go super growth mode. I wouldn't put NVIDIA there or like any of the semis because like I don't think I know enough about them to time it correctly, given those are like much more cyclical. Or NVIDIA just ends up becoming a $20 trillion company because AI demand never goes away. That's also possible. But we would need a 5th one to round it out. Palantir 28.53 up 8% right now. Philip is in Greece. Philip just took his Palantir and Bitcoin gains and went to Greece. So shout out to Philip vacationing in Greece. By the way, did anyone go on any vacations this summer? Did anyone go anywhere? I don't think I went anywhere. I went to like New York a couple times, but is that really a vacation? Like I did nothing, dude. I really did nothing this whole summer. Tyler, thank you for the $5 super chat. Really appreciate it. Thank you for that, Tyler. I went to the Baltic states, spent a month in Europe, Scotland. Too busy on my grind. That's what I'm talking about. Maine. Oh, cybersecurity. Yeah, that might be the 5th one to round it out. Maybe it's CrowdStrike. Maybe it's Palo Alto, just to go long cybersecurity on the last one. June went to Florida. Okay, Ibiza. I had a friend who just went to Ibiza as well. He just went to Spain. I've never been to Ibiza, That one sounds fun. Norway and Belgium. Dude, I got to hit up Europe. It's been so long. I need to see Europe. Robinhood 1755, Palantir 2850. I would love to go to Europe. I went to Kenya. That's awesome. Seems like people traveled. Scotland, Germany and Prague, Vienna, Amsterdam. I want to go to, there's that like bridge in Amsterdam. You guys know what I'm talking about? Amsterdam Bridge. There's this thing. There's this famous location on it. Oh, this thing right here. This thing I've seen in so many pictures. What is this called? Is it just called the bridge? This is like the famous Amsterdam like walkway, right? This is like I saw a video of a guy proposing to a girl on this one. Guys, I felt like dude, I was on TikTok the other day. Felt like a little biatch because this video popped up of a guy proposing to a girl. Dude, I fucking shed a tear, dude. I shed a tear, bro. This is how you know I'm human. I shed a tear because it was the cutest way, dude. She was a news reporter and she was doing her like ABC 7 News in her local jurisdiction. And then she turns around and then her husband's there at work and he's on one knee. And I was like, damn it, bro. The tear jerkers. I was like, this shit fucking got me, bro. Niagara Falls, yes. Niagara Falls, dude. It got me. Lovelock Bridge, is that what it's called? Lovelock Bridge? It got me though. I was like, see, look, Mark's puking at me saying, it got me, bro. I was crying. I was like, this is so cute, dude. Like, I gotta ask a girl like that one day, bro. I gotta make it the most esoteric, special proposal ever. Like, I really started shedding a tear, bro. I was like, what the fuck, bro? Like, what is wrong with I'm just, like tearing up at this stupid TikTok. Then you scroll to the next TikTok and then some stupid others. That's why TikTok is so crazy, dude. You'll like get into an emotional moment for 30 seconds. Then you scroll up and then it's like some nonsense. Some fucking person shooting a TV like in a long range. And it's like, it just went, the range of emotions you go from is crazy. It's like stocks actually after hours. Green, red, green, red, green, red. But I actually was crying. Hey, Mick, can we get your thoughts on APP? Okay, so I've heard of this one. I don't know enough about them. I like them. Jonah, let me refer you to Jonah Lupton. I think Jonah owns a ton of this. I'll put his Twitter in the chat. This guy actually analyzes them deep, so I'll put his Twitter in the chat. I like this stock. I know there's a larger moat on AppLovin. It's up 6% right now. Yeah, I think it's up like 100% over the past year. APP stock, it's up year to date 84%, 130% over the past year. Yeah, I know this one. I don't know enough about them, but Jonah, I would go through his tweets. He knows a lot about those as well. But I'll deep dive more into them because I know a lot of people are interested in that. Diego says, what do you think will happen to stocks from now to the election time? Do you think we should expect some pain next month? Yeah, I think we should expect some pain for sure. I think until the market fully realizes Japan is done, inflation is coming down, and unemployment is not going up dramatically, we're going to see pain. Now, granted, I say that, but we've already had a ton of pain. Big tech has corrected. Those individual stocks, Palantir 2860, they've corrected more than 20%. So I don't know if we need to have a lot more pain, but I think we do have pain until we get clarity on all three of those things, and then we can go further. But we're going to have to wait. Okay, so that's what we have there. I'm Beneficial said, I would round out my portfolio with Robinhood, Visa, MasterCard, Palantir, Google, Microsoft, Amazon. Yeah, I think that's solid as well. Dude, Visa and MasterCard own the payment trails for trillions of dollars. Palantir, obviously, we know that. Google, Microsoft, Amazon, can't go wrong with those three big techs. And then you got a growth play with Robinhood. So I think that's a solid 7-stock portfolio as well. But yeah, guys, I was crying. I was really crying, bro. I was really crying. I'm an emotional guy, dude. I'm an emotional guy. I'm in tune with my emotion. It's weird though, because I didn't cry for the longest time. Like I didn't really cry when I was growing up. You know, the first time I started crying when I think I told you guys this, but Kevin Durant gave a speech for when he got the MVP in the basketball NBA, and he thanked his mom. And it was 2013. I remember watching it, and he started tearing up because he was like, he was just talking about his mom and how much she helped him to become a champion. And it was the first time I saw someone like really thank someone else for their success. I think I was like 14 years old and I started crying. I was like, damn, that one really got me. So the first time I heard someone like really give gratitude to someone in their life, that made me tear up. And then these fucking proposals, they get me, bro. Niagara Falls, they get me. SoFi really like 657. SoFi is up a little bit today. SoFi 655. Yeah, it's up 3.6%. SoFi needs to get back into the 750s, but SoFi I still think is correlated with IWM. So we're going to need IWM to keep pushing. Palantir 2857, holding 28.5s. Let's see the 30-year bond auction at 1 p.m. That's going to determine the rest of the market. Hopefully it doesn't ruin this stuff. And then we'll see at 1 p.m. what happens. Amidst heterosexuality is esoteric. That's funny. That's that's a funny one. That's a good one. Okay. I think that's it for us, guys. We did another 3-hour stream. I'm not even trying to do 3 hours, but every day we just end up doing 3 hours. So I don't know if it's sustainable doing 3 hours every day, but we are here every day doing 3 hours. Under Armour up 19%. Yeah, that was incredible. Incredible day by Under Armour. Okay, let's do word of the day. If you want to know more about Rocket Lab, just go to just type in Rocket Lab emit trillion on YouTube. I did a whole podcast for like an hour with someone on Rocket Lab, so you can brush up on that before we have the earnings today for Rocket Lab. Okay, word of the day. Word of the day. I think I know this word. Amidst grasp of big words is esoteric. Word of the day is diatribe.
Diatribe.
Diatribe. A bitter, sharply abusive denunciation, attack, or criticism. I think I used this word the other day. The film critic's review was more of a diatribe than an analysis. During the debate, he launched into a diatribe against the new policies. Okay, so basically, I have a diatribe against Mayo, essentially, versus anything else. It's more than just a criticism. It is a denunciation of mayonnaise and diatribe, whatever the fuck it is. Cool. Okay, that's what we got. Also, yeah, Vince and Matt are interviewing the CEO of Rocket Lab. So shout out to them. They got that interview. I don't know when that's happening. I think it's like next week. But Vince and Matt, Palantir 2854, Robin at 1749, they're going to be interviewing the CEO of Rocket Lab next week, I think. So that's going to be cool. Peter Beck will be on their channel. And it makes sense. Vlad called out retail. Karp called out retail. Peter Beck's talking to retail. I think all the CEOs are realizing the real influence is with, people that speak to regular people, not just the institutions. And so it's going to be cool to see that one go down. All right. That's it for me. I think we'll get out of here. Now, 1.1 thousand people will wait with you at Treasury. The Treasury thing is happening at 1 p.m., not 12 p.m. So I think we still have another hour until those bonds are sold. And hopefully that doesn't tank the market. Hopefully not. All right. That's it for me. Thank you, everybody, for being here. 3:45. We got a ton of earnings after the bell. Let's see what we got going on. And we'll keep going from there. Thank you, everyone. Have a good one. See you in a few hours. Bye.